days.
Good morning, traders. Just looking at the markets here to see where we have before it opens. Jack thought we had, because of Zach Copper, I guess he thought we had certain FOMC meeting or something like that. I don't believe we did. They're just going over last month's. And I guess Deck made other arrangements. Now he's not working. He's just starting off, just doing the start off. But he's not trading this morning. Okay, let's see. I want to take a quick look at the Benzinga. See what we have in here for the morning. I didn't put them in. I was taking care of some other stuff that I had to take care of. So we're going to take Sun out and we're going to put in SMFL. Should go towards the top, and it did. Next one is REVB. Let's get rid of Asti. REVB. The ones we're getting rid of are the ones that were there from yesterday. We're going to get rid of Spry and we're going to put in Plague, PLAG. What else? Oh, Plague's no good, huh? ELAG, 60%. Oh, only had 42 average volume, 42,000. 60%? Let's leave it there for now and see what happens. I'll have to check that one out. SDIG. DIJ. Get rid of that one. SDIG. Get rid of ALLG. I'm going to get rid of Plague for now. We got enough in here. Peter, Riot, and Mara are Bitcoin. So Bitcoin probably went down. So the stocks went down. Here with the TGL, APDN, anything less than 1 million shares traded, and that's good. That will give us to start for now our watch list until the morning when it goes off, and then we'll see what's happening. All right, let's see what we got here. I have Deck in the background. I don't know if you can hear him, or if you could even hear that. I'm gonna turn that volume down. Give me a second. Give me a second. Give me 1 second. Okay. Sorry about that. I have a son who just always needs more money. Made him cancel his gym contract. He has no job, and can't pay for it. And then they're charging him $20 more a month because he can't pay for it. Ridiculous. Okay, that takes care of that for right now. Let's see what we got. You know, this yesterday, some of you might remember, I had put up a 560. I put it on top. It was all the way up there on the top. And I took it down at the end of the day because we ran below. If you look at the SPY, we had gone under. So I said, we're not going to need that for now. It was even less than that, much lower. Yeah, when we were down here. So I got rid of it. And what happened? We hit that 560 after hours pre-market this morning. So just to show you, I should have left it in there because my tuition was right. The traders would want to bring the SPY up to the 560 area. Okay, we're going to bring this one here a little closer. We're still going to say that we got the 660 here, and we got the 40 cents, 60 cents, that's 540. So we're going to leave that right there. It's not moving much right now, and there's really not much happening in the markets. They might be right until after this meeting. I also heard yesterday that the federal government lied to us. Biden's administration had lied about the numbers for the unemployment, and there was big mistakes made that they said they were doing like 260,000 jobs a month. It was more like 1.3. So instead of 2.6 million jobs last year, whatever, it was like 1.3. So they totally fabricated the numbers. They were supposed to, when it comes up this morning, there was supposed to be some sort of reflection on that on the markets, might bring them down. So we're going to have to take a look at that and see what is happening there. Let me just put something out here for a second. Yeah, this is the Dex room. So let me just take care of this real quick. People don't know. There's so much confusion right now. I was starting to watch a little bit of the Don's room with his what do you call it, with that boot camp, and I lost my interest very quickly. So I decided to go live myself. All right, let me do this here. Do this. Okay, and what do we got here? We had the high here at about 127.90. And what do I have here? 127.90. It's going to bring us 128 resistance on the top there. And then 128 is going to bring us here to 127. And I think we've been leaving about 70 cents. So that would be 30. And we're at 70. So this should be about right for right now. There's not much action in the market at this moment. So as you're looking, keep an eye on Tesla because watch out for Tesla news. Usually Tesla news hits early in the morning. Something hits, it'll give you an idea. I did put the actual contracts up. So you know if you're not in a contract yet, right now you'd be looking at 225. You could be looking at a 222.50 on Tesla. I would look at 225. I think it'll go long in the morning. Also, you have NVIDIA here. NVIDIA's at 127, so we're looking at 130 contract. That's what I put. And then we have 59. We're looking at this 560 and 561, depending on how expensive. Then, of course, on the SPX, you're looking at a 5600. Represent the 560. All right, that takes care of those there. They seem to be right. Let me just take a look right here at the top. I didn't bring this one. I just did it by eye this morning. Let's bring this down to 50, 222.50. That's going to be our resistance point, and that's going to bring that to 224.25. 224. 221. I'm going to bring it to 221.25. Right? I said 221.50. Right there. Let's see why. That one's there, and it's about here. Okay. I'm going to say point. Still going to leave the $1.25 and see if it pulls back first in the morning or if it just goes up. If it goes up, we'll be looking at about 222.75, the top of the VWAP plot here. So we'll look for a push up here and then come back down towards the VWAP. All right, I don't know which way it's going to go at first. Whichever way the SPY goes, I'm wondering if this will go the opposite way. Then we have our top. What time is it? 9:24. Then we have the top here, okay? And we had here at, let's see, I'm going to put this down to 50 here, 528.50. It's going to give us 529.50. Okay. It's a little wide range right now, but you can see it was very spotty this morning, but it did hit some highs up here, and we had some lows down here. So let's just leave it there. We got our dollar in there. Of course, AMD. Look at the markets. They're really dead right now. I don't think there's really much going on. Look at this, like a dead standstill. Oh, look at that. Maybe I'm wrong. Okay, so we got some action here at AMD. We got some pullback here. On top here, we had 157.27. I had 40. I'm going to put in 25. 157.25. Yeah, straight across the top. So a lot of resistance there. And then 157.25. We know here 156. Let's go to 156.25. That'll put the dollar in here until we can decide what it really is. All right. And then we have Apple. Apple just pulled a low here of 226.30. So let's see, 226.25. 226.25. 226.25. That's going to bring us up to about 70 cents. It's 95. Let's just make it 227 right there. 26, 25, 227, and this will come down 5 more right there. 220. That's 220, and that would be 90. But I'm going to leave the 227. Well, I thought I took that out. 227. All right, there you go. That's better. All right, that takes care of our top. And is there anything that we're looking at in stocks at the moment? Let's take a quick look at our watch list and our number one stock, penny stock, SMFL at 97. It's going to have to get over the dollar before it really sees much volume. Looks like it's seen most of its volume this morning at about 8 o'clock this morning. You have to figure out why. What the news is, an exclusive smart for life. Benzinga provides updates, M&A, negotiate acquisition. There you go. So it's already got its hype over here. We'll have to see where it goes from there. That if we can get up to about $3 today. So I don't know about that. All right, that's it. It's really very quiet. Very, very quiet this morning. All right, and let's just wait and see what's going to happen here. We got about 3 minutes to the bell. Let me just do something real quick for text room. The bells. Okay. Okay, that would be 2-minute warning. All right, still got a job to do. 2-minute warning is coming up in 30 seconds, 25 seconds. Let's all have a great day. Don't be impulsive off the start. Let's wait and see what the markets are at for, just so we know which option we're going to use. I'd rather wait 5 minutes. There'll be plenty of opportunity today. Okay. It could be right off the bat, but you want to wait and see. Unless you want to gamble your money. 2-minute warning. All right. One more. Let's do the 1-minute warning. All right. Okay. There we go. Tesla. I told you to keep an eye on Tesla. And there it was. Tesla already hit that top VWAP plot. Just when I told you what would happen at the bell, it happened right before the bell. I can't always be perfect, you know. We are a minute and a half away from the opening. I'm going to leave it there. Should bring it all up. I need to do this bell thing first. Give me a second, 6:15. Let's see, we got a minute and 10 seconds. I can't believe it did exactly what I said it would do at the bell. It did it 2 minutes before the bell. All right, we got 1 minute to the bell right now. All right. Put that up there. We're going to be looking for 223 now as here, and that's going to bring this to 221.75. So it just went up 50 cents. 221.75 is up here. All right. Let's leave it there. We got 10 seconds. 30 seconds. All right, here we go. Guys, hear me okay? 15 seconds. There we go. 10 seconds. Market is open right now. All right, let's see. We're off to the races. We should see a pullback first. There, we should pull back right at the mark, right there for the split second. There goes my eye again. All right, we're going to see. We hit that 220. We hit that 223. Bingo. There it goes. We got a new destination now of 223.50. So let's do this. We're going to duplicate this. So we're going up, like I said, 225. There's your 25. Two I hit here. So we got 25, which is already a hit. And that's going to be our alert. A-L-E-R-T. That's already a hit. Boom. Bam. Bam. And a pullback. See exactly what I said what it would do this morning? It did. It went up. It hit its mark. Its first mark hit it even further than I thought, which tells me that after the pullback, we're going to see it move even further today. Okay? So that was a good call on Tesla right off the bat. I just had a feeling. I don't know why. And there it goes. What did I tell you? There's your pullback, and they were going for the second one, which I said is 50. Okay? And I think it was already 45. Bam, which is a hit. There's your 50. It's already a hit. Boy, I was right. Unbelievable. How did you do that? I'm not sure. It just came to me. All right. So if we continue this way, we can see we've got 223. We're going to be looking at 224. I'm going to go even further. Instead of saying 75, I'm going to say 224. We could be looking at a 225 day. Okay. But our alert right now is going to be 224. I'm not saying we're going to hit that yet. We might come close and pull back. Let's see what happens. 224 really should leave it on the 75. Let's see. If I leave it at 223.75, it is the next step up. Okay. Let's see. We're not there. We had a nice pullback, 223.75. But right off the bat, from the bell, I was right. Oh my God, I lost it. Where the heck did that go? Where the heck did that go? Activate. Let's duplicate. I lost it altogether. I lost it. Duplicate. Oh shoot. Remove. It's in here. Remove resistance. All right. Let's activate it. One of them. It showed two, and there's only one. That's really weird. Okay. I gotta go find myself. Here's the 223. And then the second one would be, we're already down here. See? They pulled back, but they're gonna duplicate it anyway. We're right. And for later, we're gonna say 223.45 on the top is gonna be our alert. Okay, and that was going to be 220, 223.75, I think I said. 223.45. That's it. 45. 223.45 there. Only thing I forgot to do is change this. Is edit and do this. Big difference. Boom. Say okay. And then we got here, we just pulled back all the ways to 221.30. That's totally amazing. So let's put this right now at 221.50. 221.50. That's going to bring our top down now to 221, 222.75. See, now we're starting to even off and we know exactly where we're at. But it looks like I will know where we're going to be a little bit later. 221.50 and 222.75 is your $1.25 right now. All right. Bring that over here like this. And then we got here. And what else moved today? Meta went straight down and they came up. AMD did the same thing. It went down and came up. Apple stayed within the channel. So right now we're back into the channels. I'm not going to touch anything on the top just to show you. I mean, I could pull this down a little lower to there at about 520. Oh, look at that. Still testing the bottoms there. 528.35. Let's do it. Watch out for that order zone. 528. It's not that much of a difference. See that? 528.35. And this will be 528.35. 29.35. It didn't bring it much, okay? And you can see we're still in that channel. Let's see if we can break through that channel. See how sporadic it was in pre-market. There was very little going on. All right. And then here, we pretty much stayed in the channel here. So I'm going to kind of leave it alone and see where it ends up. And the same thing for Apple. Let's go back to our top. I get a real kick out of some of these people that can only do one stock at a time. And they make so much out of this one stock. You know, there's so much more to stock trading than watching one stock. Any of the professional stock traders that I know, look at this, we pull back even more. They're working between 5 and 10 stocks at a time and trading them. I can't do it myself. Between you and me, I've only traded 2 stocks at a time. That's all I can do. 220, we're going to bring this down to 220 now. 220.50. It dropped back to 20. 220. That can't be. What was that? It was 221. Let's put that at 221. Right there. 221. Already at 222. Going back up again. See that? 222.25. It's amazing how it went straight up to the top. What a great put that would have been, huh? But right off the bat, it did what I said it was going to do, and then I said it was going to pull back. I did not expect that much of a pullback all the way to here, which was almost a low VWAP plot. So we went from a top VWAP plot all the way down to a low VWAP plot. Right now, we're just at the VWAP itself. Okay, that's your white bar right here. So really, I shouldn't have any upper or lower alerts, but until we find out which way we're going, I have more of a feeling we're going to go back up towards the top again. That's how they make their money. They drop it all the ways down. That's your total manipulation. Unless there was something there was nothing. The only news was at 9:09. So unless I can go into, let's see, right here. Well, I hit it right out of all of them. There's like 8 of them up there, and I hit the right one. Right here it says 21 hours ago. There's no news on Yahoo Finance. So right now there's a lot more manipulation than anything else that's going on. All right, let me put this here. Let's see, what do we got? I'm gonna keep an eye from time to time at Dexter in case somebody comes up with like SMFL was a crack. I don't really care about that. Any stocks without taking a quick look. Let me just go into my scanner for a second. All right, just give me 1 second here. All right, I'm going to take this up, put this back down there. All righty. Look, see what I tell you. So it's going back up. You should be in a 225 put for Tesla right now. You could be making some money. It's going to go up and down, up and down. It's playing with it. All right. So we got 222. There's my number, 45. Oh, I just screwed up. Shit. Let's get ready to rock deck. We're a little late. You're a little late. We're already rocking here. 222.55. What do we got? 222. There we go. 222. Let's put 75 in there. That I think is our next destination there. 222.75. Already passed. So we're going to 223. 223 is next right there. We had a touch at 95. Let's put this up to 95. This way we can really see where we're going. And that's why I do this. It's a lot of work, but at the same time, you can see your channel. Now, if we're at 223.75, 222, 222.95, that's going to put this one here at 221 and 90 is 70. That's your $1.25 right now. There's your channel. Okay. Look at this. Look at the drop. Look at the drop. Right to the mark. Right to the mark. Bam. This is definitely being played with, you know. There's a lot of manipulation going on here. We're in the dead center here, in the middle here. So right here we got about 559.50. Let's move this up a little bit to 559. Let's see if 50 is good or is it 45? 50. And then here would be 10 on the top. 59 and 60, 10. I don't even see it being higher. I see it being lower. Let's use the 560. That's what we have. I'm going to use 95. Come back. That's where they want to push it to. I'm going to leave it alone. Just leave it alone. So if I here I've got 60, and that would be even up. Would be 560. Is that right? 560. What am I doing? I screwed up. I did it again. All right. Yeah, I have it. Duplicate. I don't want to duplicate it. Let's edit it. My support. What did I put in here? There we go. So it's 59 and 59 and 40 cents would be right there. Perfect. Okay. I don't know what I did. I got lost there for a second. Happens. Here we got the top of the VWAP plot. All right. You can see it there. It's 128.20. So we're going to move this up to 128.25 because that's the step right there. Right. We stayed here. We're in the middle of in Tesla. We don't want to do anything until we reach the top of the bottom. If you're in anything, you should be in a put right now. You should be in a 220 put on the Tesla. All right. Here we should be on a 130 on NVIDIA if you're going long. And right here, you should be on a 260, 250, about 262 on the SPY. There's no 50 here. 262, 562, I'm sorry. 561, 562. So right there, you can see on the top here, we've got 560, 60. You should be at 560, 561. It's fine. Probably cheap enough. We're only at around 10, so we're going to say our next step here would be 25. You'll see right there, just about to hit that 25 up there, and that's going to bring this here to 65 on the bottom. You all understanding that? Because we use 60 cents. We're using 60 cents. That'll give us the 25 right there. And that'll bring us to the next support level. All right, that's exactly what it's doing. I have it a little wide open. And then here you can see there's the hit right there. All right. So we got the hit at 25. The next one's 45. All right. I could be putting in alert sections like here. All right. Which we already hit on Tesla. And it would have hit right here. That would have been a hit for me. I mean, I could put that in right there at 25 because that is a hit. Right there. And now we can say we're pushing this up to the next one, which is 45. We did have a slight pullback here. And you can see right there. So there's the 45, which it did touch again. And that's going to bring this down to, I think we're using 70 in here. We're using $1. Let's leave the dollar for right now. Most of the time it is $1. It changed after, NVIDIA used to be about $2 until after the, what do you call that, the split. Once it split, it was hard to find it until I finally came to about 60 cents. What does that mean? When it goes up, it goes down. Usually, if I have that $1.25 for Tesla, that's where the support, when it drops, that's where it drops to. And then it'll come back up. So that's what I'm looking for. When it goes through those drop periods, like here, it's always that 60 cents. And here, it is saying about 60. Apple's about 70. It just seems to work out for now. As the volume increases, so will the distance of that gap. You won't see this anywhere else done this way, okay? I'm sure a lot of people out there have opinions on what I do, but there's a lot of people who come here every single day and they watch and those alert system works for them, and they found out they can make it work, and they understand it, and it takes a little time to get it, but once you do, you know, all right. thinking about changing out brokers for myself. I don't know if I want to continue trading with Ameritrade. It's done me wrong so many times. I just feel like my money's being eaten up every time I save. But the actual system on a regular day during the hours of 10 o'clock on, let's say, it's fine. It's usually just those mornings or anytime you get this crazy rush from news and stuff. It's not a premium broker, and when you don't use a premium broker, you can get hurt. That's why when people say I'm going to use a market order, like I was listening to Engineer the other day with that market order, I'm saying I wouldn't do that. Okay, I wouldn't do. I do it. I've done it myself, and I was doing religious market ordering out and market ordering in, and then I realized how much money I was losing, and I said, "This is bullshit. I'd rather not get filled than to find out." I go to get out, and then what's going on here? I thought I had 500 shares, and I got 260. That's all I got filled, or whatever it was, two contracts. And sometimes it's even, I don't know if you get partial fills on contracts. I think you just get you go for 5 contracts, you get 2. You go for 5 contracts, you get 4. When you do it for shares, then you get something like I put in for 500 shares. And for me, if I go to my drop down right now on any stock, you'll see. See, it says 500. But the minute I go and I put that into any here, here's the SPY. And you'll see my date search should be correct. Let's see. The SPY is the only one I didn't change. But if you look at SPX, there we go. That's SPX. You'll see my date, the 23rd, 8/23. Everything I do, even though I'm not trading, is up to date. But you see the 5. This is my point. I have a default of 5 contracts all the time. I have. Let's unlink this again and go back to NVIDIA. All right, I'm always ready because of the color coding, and if I can learn another system that's also to give me that color coding that I can do what I'm doing here, then I will do. Until then, I'm not going to switch. I did have Trade Zero. I still have it. I have Lightspeed. I just have to learn how to use it. Lightspeed's probably all around best as far as a broker. Okay, it can be costly, but if you're making more money in the long run, it's probably worth it. Okay, I hope you understand that because I looked at the amount of trading I do over a year's time, and it says that I'm doing 25 to 35 million dollars of trade in and out. And by the way, that is not a lot. That's not a lot when you think about the fact, and probably it's more now since I started doing options. I did that when I was doing stocks. All right, so options, you got to remember, you're buying 500 shares of a stock that's $128. It's not the same thing as doing, you know what I mean? It's more money than you have in your account, but it counts as a volume of what you're doing. All right. And you'll see it's probably a lot higher when you're doing options than when you're doing stocks. Even if you did the same stocks, 500 shares, 500 shares, 500 shares on the options is contracts, but it's still 500 shares. And when they look in your account, that's what they look at. It's not that you lose that money. You don't lose. If I put up $100,000 to buy a stock, it doesn't mean I'm going to lose $100,000. It means if it goes down $1 and the stock's $100 a share, I lose $1, then I'm losing $100. All right, it's the same. All right, if it goes down $5 quick, I just lost $500. But I don't want to lose any more than that. Then I want to do stop losses. But if I use stop losses, I take that possibility of being knocked out of the ballpark each time, and then I got to buy back in and buy back in, and I've actually lost. If I don't have a stop loss and it goes down and I don't get out, I haven't lost until I sell. So there's always the chance that if I wait long enough, it's going to come back. But we don't want to start playing a game of hope. Anybody here know what a game of hope is? Hope says, "Oh my God, I cannot believe it just dropped that far. I hope it comes back." So we don't want to find ourselves holding the bag, and then you get into the thing, oh, well, I'll just double down. So it's down 50 cents. I doubled down. Now I'm only down a quarter times twice as many shares. So you're still down, okay? It's just your cost averaged it. So if it comes back, you have more chance of winning. Here's a hit. So if you were patient here, like I told you, bingo, right there. There's another hit right there on the alert of 223.45 on Tesla. What I told you, I felt better that it was going to come back up. Just what it told me this morning. It jacked up really fast, then came all the way down, tried to come back, did not have enough oomph, so it pulled back. Remember what I always tell you, with pull back, You've got the target with the bullseye on it. You pull back, let go, the arrow falls in front of it. So next time you sell off even more and you let go and it goes right through the target. And sometimes you sell off too much and then you buy back too quick, it goes over the target. Okay? And that's what it is. I kind of compared it to a bow and arrow, buying and selling. You let go, you just bought it. You pull back, you sold. Okay? And if you think of it that way, you'll start to understand how this works. For me, that's how I've done it for myself all along. And I always realized that sometimes those pullbacks weren't telling me that the market was going to drop. It was telling me that it didn't drop far enough for it to go forward enough, okay? They just don't have enough oomph. For whoever the two people, there's usually two major players that are in there. And if you look and you go into a large, let's say you go into a large, what's playing here? Let's go into what's playing. I'm at the movie theater. Let's go into Tesla, okay? And let's put this on a 1 minute. And if I look here, see, I do this because now I can watch up here and you're going to see the actual 446,000, 342,000, 259, 60, 70,000. See, boom, boom, there it goes. Another hit, another hit. But go to some of these smaller ones, 225, 387. Yeah, right here. Looks like a small amount, but it's not. Remember, these are the open and close prices. It has nothing to do with the volume in there. But if I can get an idea of the volume, so when I look at this and it goes 2 and 3 is 5, 5 and 3 is 8, 8 and 3 is 11, 11 and 15. So I got 1.5 million shares being right here, okay? And if I look going down here, I've got 330, 430, 530, let's say 520, 520, 720. There you go. You got about $1.2 million, 1.2 million shares. So anywhere between 1 million and 1.5 million shares are being traded up, down, up, down. Take a look at this big drop, 560,000. Boom. Okay, on a 1 minute. Then here you have 4. So 5. What did I say? 560 and 460 is 960, and here 9 and 4 is 13. 1.3 million. So you get to see an idea between 1 million and 5 million being shares traded. Then you can figure out the manipulation. How much is one person? How much is all the little guys put together? So if you got 1.3, probably 1 million has got to be one person. It's very possible one person has enough. And how much is a million shares of 1.2128? So 1 million shares, right, at 128 is what? That $100 million? That's a pretty amazing when you think about the amount of money that's being traded in a single minute. Here we go once again, and let's go back to Tesla, because I told you in the beginning Tesla was on money, all right? And right now we've gone up, and I told you, believed it was going to go up, and the next one we're looking for is 224. And if you remember earlier, I told you that I thought that it would be a 225 day. Does anybody remember me saying that? If the traders are probably going to try to push this up to, so let's put this on the 224, which is a hit, all right? And then you're going to look, and right now we can go 25 cents at a time. The next one up is going to be 224.25 until we get up to, what do we got now? 224.25 until we get up to that 225. So we'll take this now and put this up to 224, right? And that's going to bring our bottom down here to 222.75. 222 and 75. $1.25 is 224. Okay? You see how that works? And there we go. Bam. There's the hit again. So where do you think we're going? I can just go one time. It might get a pullback at 224.50. All right? That's the resistance. I want to put this one up to the next one. All right? So this one here, let's say, is 224.50. And let's look at the high of the day. All right? Let's do this right there. 224.50. What the heck's going on here? Did I miss it on the bottom? I did. 224.50. Okay, there you go. Boom. We have not hit that yet. That's going to put this at 225. All right, 224.25. And of course, that's going to bring our bottom up to 223, if I remember right. Let's say 223. And after a while, this will start to make sense, and you'll realize that this is $1.25. These are about $1. This one here is 60 cents. That's what, and there it is. Bingo. So far, I've been right all along on Tesla. All right. So what's that going to bring us? I can say 75 is the next one, or let's just put it where I think it's going to go, and that's to, it might hit right below this at 90, 85, 90 and drop before it gets there and then get there. Okay. There may not be enough oomph for it to get there. By the way, Meta's doing the exact same thing as Tesla's doing right now, kind of moving together. I'm not saying that one has anything to do with the other. I'm just saying they're kind of moving the same way. All right. Because I'm watching it on my top. I watched 3 stocks on my top, 3 stocks on my bottom. But if I got that last monitor, it would block that light that's in my eyes. And give me 3 more. Then I can have 9 for you. And maybe one day it will. Before I retire, we'll see. I don't know. All right, let's put this up now to 224.50 right there. That's our resistance is 50. And this one here is going to be 25 on the bottom. 223.25. That's not even right. Yes, it is. 25. Let me see. Support is 25 and this is 50, right? That's it. Perfect. Okay. Come on. Ugh, when it does that. Boom, boom. There you go. But so far, I've been 100% correct. And there you go. You see, there's just not enough to get it to the next point. So they got to sell off some. And then they'll try to push it. If they don't have enough, you'll get a larger pullback, probably to the 13 exponential. All right? Because it's not going to be here. It could be, and it could be between your 13 exponential and your VWAP. But I think it'll be down to the 13 exponential. You'll get pullback, and then right now you're looking at a 225. What did I put in there for Tesla? 225, and it's still good. Still good. So far, if you have followed my alerts and I've given you enough time, you could have got 1, 2, 3, 4, 5, 6, 7 hits there, one on NVIDIA. You get 18 a day. No, I'm just kidding. You get what I give you. All right, let's go back one more time and see if anything's changed. I got to just change my top for a second on, wow. And Meta went all the ways. It's still going. So right now you can be in a 535 call on Meta. But right now I'm going to put it at 534. 534 is my my resistance and my alert. 534 and 533 on the bottom. 534, 533. 533. Okay, bingo. I got that one. Whew, looks tight. All right. AMD really hasn't moved. It's still in the same channel, and Apple hasn't moved in the same channel. Meta, 903, Meta's search for AI. Cloud takes it into a new terrain. That was at 903, and from there on, it's been going up. It was another good one. I wasn't watching the news. That's where you really need to watch the news. And if there's like 1 or 2 real good stocks that you watch the most, you should have alerts set up. And I know you can do it even with Thinkorswim, where it will go dink. It can either make noise, not make noise, or just pop up. And then it'll pop up. You have it on the bottom. So like you see, I leave them right here. They don't have to be large. All you're looking for is time. Right now, it's 9:56. There was right there. That was the market news. Target and TJ Rise on strong. One before that was 9:15. So Fed minutes to be released at 1 o'clock. Okay, so nothing's happening till 1, but speculation as far as the Fed. So there is a Fed's meeting. All right, so the Fed meeting, FOMC or something. Whatever. What is it called? Anybody know or can bring up the actual? I'll do it. Let's see. Let me see. Fed's meeting today is Fed's meeting and calendars. Okay. Board of directors. So let's take this here, copy, and I'm going to put this into, not Dex, I'll put it into mine. All right, right here. All right, so this is your Fed meeting right there. Okay, so we can go into the calendar and you'll see. And then later we can bring it live if I'm still here at 1 o'clock. I don't see why I wouldn't, but as long as I'm here, let me put this on for a second. Let's bring it up to date. All right, so Fed's meeting, where is it open? What did I do with it? Here we go. Here we go. You know what? I can open it from here. Watch this. I can do this. And then I can, here it is. All right, so I can bring it in here real quick. I hate to do this right now, let's look at it in a few seconds. We know it's at 1, but I'll show you what to look for. All right, and then when you can see right here, we're up to 560. So you see, I got that call back again at 560. Now it's 560.25. So we got the 560. There's the 560.25. And the next one up is going to be 560.50. All right, 560.50, which we have not hit. But the 560 and the 560.25, I did call. And there's your 560, which would be right there, which did hit early this morning, right there. Bam. So from yesterday, when I said the 560, there it is there. And there's your 560.25 right there, which I did put in. All right. Now we got 560.50, which we're just shy of. And that's going to bring this down. If we got 50 there, it's going to be 90 here. So we'll just bring this up to 90. So 559.90. That gives you 60 cents. All right. Don't forget to put this back. Or when you go to touch this to do like even this, you'll mess the whole damn thing up. Remember before I told you on Tesla, if it didn't get the pullback it needed, it would pull back between the 13 and the VWAP. I said closer to the 13. It did. If you look here, it went to the 13. It went up for a second and then came down to the right to the VWAP. All right. But don't think it's not going back up. As long as there's positive news on Tesla, all right, let's bring this down to about, let's go to 75. It might be too low, but that's perfect. 75. Changed everything here. So it's going to bring this down to 224, I believe. There you go. So we got, it's still dropping a little more. 222.50. All right. We got 50 instead of right there. It's a little lower than I expected. Why? Any news? 51. There was. Tesla stocks shrugs off double whammy of bad news. Shrugs off. Here's what's happening. Xpeng and Maker quality results with slightly above expectations. Slightly above, however, its outlook disappointed. That's why I just pulled back. After you get the bad news or the rumor, what happens is it's going to rebound and start to come back again. All right. But then people just lost some money. I mean, there was some big sell-off because why? Because the people who are really watching Tesla and have the biggest control over it are getting out as quick as they can when they hear that news. That's what reflecting there. By the way, if you're still in Meta, anybody watching Meta, all right, now it's on a 540. It's going up. So right now we got 536. I'm going to say 537 is right now it's 536.75 with a 537 alert. Okay, 537 alert there, folks. 537. Let's see. That's going to give me 535 and 75. There's my dollar there. Oof, that tight. Okay. Just to take a quick look. Oh my God. See, the news is pretty bad on Tesla. So now you're looking at a 220 put on there. 220 put, and it'll go back up to a 225 call once it starts to rebound and it finds itself. So right now, look at this. That's terrible. 220, some people lost a lot of money just now. 221.45. You don't. That's what you got to be careful of. You never know when that kind of news is going to come and hit. And that's why for some people, they cannot do anything without a stop loss. 221 is 222, 45, 55, 6, 45, 50, 65, 70 right there. Should be 220, 270 now. So that just brought us down 1, 2, almost 3 channels down. That's a lot of money lost. Here we go. We're looking at a 581, 561 on the SPY now. So right now we've got 85. Let's just go to 561. On the resistance is a little lower, really. It's actually still down here at about 65. Let's put it down to 65. 560, 65. But we're looking for, all right, what I should have done is the alert. And the alert's going to give us the 561. So we duplicate this here. We're going to put this up to right there. Is 561. Right there. And then we'll make this an alert. You see why we're doing this now? How many can you do at a time? There you go. There's a 561 alert. The only thing I've got to put in there. Let me change that for a second. I'm not changing. I'm just going to add something. Is here so you can see it. Is 561. Okay, 561 alert right there. All right. Now that's 560.85. This is going to be about 25 right there. Bingo. Right by the 13 exponential. 25 and 60 is 85. Actually, it was 65. I'm sorry. 65 is 05. Let's do this. There you go. It's here. There's your 60 cents. All right. A lot to keep your minds on, right? There's 48 people here. How many stocks can you watch at one time? Let's go back to our top for a second. And as you can see here, all right, I already did it on the top. I have them up there on 3 more. So here, we have it here. You can see we have 85. I had 75. You can see the top is 85 now. So let's just bring it up just a little bit. That's our resistance at this point. It hit the 85. It pulled back. 85, and this should be 85 also. All right, and there it is. There's your 90. There's your 90. So let's just put 536 in here. 536 in here, and make this 537. And you can see 537.70 is my alert. 537 right there. And if I wanted to, and I'm not going to, I would bring this up to the top of this VWAP. Look across to the right. It says 537.75 right there. That's going to be my alert for Meta. Okay. And I just bring this down so you can see the actual. And then here we just finally hit another channel in this one to 157.60. All right. So we got 157. Let's bring that 60. It's up another 35 cents. And then here we bring this to AMD. We said we were leaving 60. What is it at? I forgot. 60 is, I'm going to say right there around where the VWAP is. It's going to bring me to, that's, what is this? Yeah, 60. It's going to bring me even money. It's 150. It's come back a little, but let's say 157. I think that's right. It is. Okay, bingo. And then this one here, AMD, we got 227.70. 227.70. So it's gone up another 70 cents. And then we know that we leave 70 cents in there. So we're going to make this 227. And you'll see it'll work out perfectly on the bottom. We used our top within pennies is 227 right there. And there's your 70 cents right there. It'll work out within pennies if you go right there. It's 227.05, somewhere around there. Let's go back. Here we go. And you can see here, if I was going to plot it out, it would have been 128.50, which it hit right there to 75. So we got 128.75. You can see we're looking for 129 on that one, probably a 130 day. Did I just do that right? 128.75 is 28.75. Let's just leave it at 128. That's about 75 cents. It's about right. Okay. And this, I cannot believe. The news was so bad for Tesla. So bad. We got 10 now. All right. I'm going to eat this banana before I get sick. All right. Sorry. You get to be my age, you got to eat certain times. We're going to bring this down to right there. 220.65. Perfect. So 65 to 90. So we're going to bring this down to 90. So you can see if it's 90, it's got to be 221, 221, and 90 right there. It should work. And it does. Okay. I worked from my bottom and brought it back. I didn't use this because it already came back to this area in here. So there was a double bottom in here. I just used the double bottom. All right. Does that make sense? Okay. Any questions? Ask me no questions. I'll tell you no lies. Thank you, Golden. Step in when you can. I'm not always watching the board because what happened to Jay again? Missing a lot of time here, buddy. Okay. I'm gonna refresh this page here real quick. Bingo. And let me refresh this one real quick. I shouldn't lose you, but I'm gonna refresh it. I turned the other one on, so it shouldn't refresh. There we go. And that should give me about 8,960. Let's see. It should be about 5 seconds. 3, 4, 5. Perfect. 5 seconds. That came quick. All right. I'm going to stop the other one. Everything's good. And now you can see we've kind of like mellowed out. You can see if you look at your day here, you can see that the SPY it's very choppy, but working its way up. 560.85, we're looking for 561 eventually sometime today, depending on this. Now, you can see real quick, I don't think it's that positive. I think we're very close to the edge. Let's see if I'm wrong or right. I haven't looked at it. 110 on the Dow, 1676. So the S&P is a little stronger than the Dow, and you can see the Nasdaq's doing pretty good today, and even the Russell. So all positive. Microsoft and Google, the two biggest, are pulling us down. They're pulling this down. The S&P's down. But sorry, I said that the two that we were looking at, Microsoft and Google, were pulling us down. Just wanted to add a few more things to the watch list real quick. Hold on one second. I got REVB, in case we want to go there. All right, change from lowest to highest. There we go. Pull it up just a little bit. And what else do we got? SDIG, it's in there. VHAI. It's a 7-cent stock. I won't touch it. RZLV. RZLV. I don't look at penny stock. If you want penny stock type of crap, you can go somewhere else. GDC. It's not in here, so we'll put GDC, and then we'll come back to this after. And BBAI. I know that stock. BBAI. There you go. And they're all on the top. They're good. We're good. Everything's green too. All right. Real quick look, just now you can look at it. You see everything here? We're green straight down the line. That's not just the S&Ps. You got the Dow in there and the what do you call it? The S&Ps, the Dow, and the Nasdaq all combined. Right now you can see we slowed down. Finally got a breath of air at 10:10, and at 10 o'clock it only went up. Let's see here. It didn't really go up. It went up for a split second and pulled back. Same thing here. Went up for a split second and pulled back. All right. So let's see, reverb. That's up 125%. Take a quick look at that. All right, so it's a big chart, and let's look at reverb. Just hit the watch list, hit reverb, bingo, and that should give us the stock. So you can see this stock started off at $1.95, up 130%. I don't see it from when. Maybe yesterday's closing. All right, that's that one. Then you got SMFL as your second stock. Coming down, it's nothing, you can't short it with an SDIG, still going up a little with a pullback. As long as it holds above $5, it's good. It'll continue to go up. And GDC, same thing. It's at 288. It's trying to hit that $3 mark. If it gets over that $3 mark, it didn't get a lot of resistance up here at 275, 285. If it gets past that point of $3, it will pick up more volume. All right. And then BBAR is another one. Choppy, and you had 1, 2, almost, I don't want to say that there was a Head and Shoulders in there, but let's just see what's going on here. It's trying to push. It's got to get over that $2 mark before it's going to get any volume in there. All right, there you go. Look at the stocks. Now I just want to see if I can put out the contracts. Let's make you gold there, boy, because if you're helping me out, then you deserve to be in yellow. Okay, let's do another thing. Let's go over the contracts real quick. Now, remember, when I gave you the contract, for some of you who don't understand, number one, I'm the active trader, and this is my world. And when you come in here, you come into my world. That's number one. Number two, when I call out the contracts, I'm giving you both the calls and the puts. Depending on the direction, the trend is your friend. All right? So if we're going in a direction and you don't know what contract, look at the list. It'll tell you which contract you can use. Right now, we've got 560 and 33. So that's a 561 call on the SPY and a 560 on the put. Now, you can go to 559 on a put, or you can go to 562 on a call. You can go a little further out of the money. That's fine. Now, I'm going to go take a look on my top and look. We got 5610 is right now 56.10 is my put. So 56.15 is my call on SPX. And that is on the 21st contracts. I didn't change it on the one on top. All right. But it's the 21st. Couldn't use the 20th. Too late. On Tesla now. On Tesla, you've got 220. I got to get rid of this for a second anyway. I can't see the other one. 221 is going to be 220. Hold on. Give me a second. I lost it. Whenever you make a touch on a move, it changes the whole thing that I'm doing. All right, you got 225 on Tesla, and 220 is still correct. You got 130 and 125 on NVIDIA is correct. The higher number is always the call. The higher number is always the call. All right. I do them from left to right. And if you look in the products, it's always left is calls, right is puts. Next one is is going to be on top is Apple. Apple is now 230 and 225 is correct. AMD is 160, 155 is correct because it came back down. And 530 is not correct. We got 540 now for Meta and 535. And that's on the 23rd contract. There you go. Here's your contracts as they stand right now. All right. Anybody have any questions on what I just did or why? I know some of you are new. And if you're new here, you like what you're hearing, you're not subscribed, you know you can always go and subscribe for free to the Active Trader. You just go into the lobby. You don't even have to leave here. What I'm going to do is I'll give you a link and you can click on it. And I'm going to show you something real quick on mine, which you'll be looking for. It says, mine says hosted. Yours will say subscribe. If yours says subscribed with a D at the end, leave it alone. If it doesn't, then, and here's the pullback. 9:50, no news. 9:27, no news. 10:15. Why the pullback? Where's the news that gave us this pullback? I don't see it anywhere. Does anybody know why? Look at this right here. That's some pullback. 5.59. People just got hurt big time. Big time hurt. That was over $1. Will it come back? I don't know. There's 5.59 support. There is 5.59 is 25. So we got 5.59.25 support. 5.59.25 support right there. And here we didn't lose much there, but we did on Tesla. Why the pullback? That's the big key word. 219. 219. Let's try 45 in here. 219. It's about where we're at now. 219. Still dropping. Still dropping. 219 is 220. 220. Let's leave it there. It's a little closer than I wanted, but let's see. And let's go to 218 here. 85. 218. 218, 85. We're still dropping. We're still dropping here. Question is why? I don't see any news. It just happened all of a sudden. It started happening right here at 10:14. Here, 10:12. What happened to 10:12? I know. I don't know why. I want to know why. I want to know why. Got 05 here, right there. 59.05. It's gonna come back up, but why did it do this? Right there. We're gonna leave that 65. Make that 59. That gives us a whole $1 right there. That's your 60 cents. Why do we drop like that? Takes all my top alerts off the board, is what it does, but I'm going to leave them. $35. Let's put 30. What do we got? 30. Why the big drop? Can anybody find the news why? Let's see if that's gone right before the dump. I somehow managed to catch that right before the dump on the SPY. IWM. What happened with IWM? Just Warren Buffett lighting up on Apple. You might want to scale back on some of your winners. Here's how to do it with options. Why millennials are too young to be bonds. Bears have calendar on their side. Market bears may have a calendar that's 8 days ago. There's nothing. I don't understand. Let's get rid of Don. Let's put it on the other side. SDIG, sure. Why? I still don't see the why. I know it would bounce back. That's a great time to go in those calls that I put up there. It'd be a little cheaper for the calls. You just use what I put on the board. You'll be fine. Right back up to the VWAP, you see? Right here. Right for the VWAP. So you got back to 560. Right there. 560. It took 2 calls on SPX at that drop. Oh, God. Just hold on to them. Don't get out of them. You're going to get your money back. Don't get out of them. Don't run scared. You didn't get out of them. On SPY, 560.50 is resistance. It is now. It is now. Right there, 560.50 is your resistance. A little less, but that's right there from before. That's where you wanted to go back to. Once you do that, see trading profits. It's exactly what I'm talking about. Having patience and not playing the game of hope. I hope it comes back, but that's where I know it's going to come back up. If you didn't get rid of it, you'll get your money back. And watch it hit my top at 561. So for those people who just took advantage of the bottom, if you took advantage of that bottom just now, you're in good shape. This should be 90 right here on support. Right there. Right between the 13. See, it went to the bottom VWAP plot. We're going to come back to the top VWAP plot right there at 560.60. Trading profits. Did you hold on? Did you keep it, or did you go run scared? If you did, that's one of those moments you say, oh my God, I can kick myself. I can't believe it. I knew it was going to come back, and I didn't hold because I got scared. That's the difference. Patience. Let me tell you what my friend says about patience, okay? Read this carefully. Let's see. That's wrong. Hold on. Cancel that. Let's see if I can put it in here. Here we go. I love this saying. I really do. And it makes so much sense. Warren Buffett says that the stock market is a device for transferring money from the impatient to the patient. Be patient. If you can't be patient as a stock trader, you will. Oh, you're still in. Good for you. Good, good, good. So you're not down that much right now, or just about even, correct? You're still down a little bit. If you got in right at there at 50 and we're down to 30, then you're down about, let's say about 15, say even 20 cents. So 20 cents, that's 20, you're down about $40 on 2 contracts, correct? Oh, you had SPX. You had 2 SPX, you're down more. You're down about $100 right now. That's okay, it's coming back. You'll watch, it's going to go right through your spot, I hope. Game of hope. I hope it comes back. It will. But the big question is, what made it drop like that? That was scary, and nobody knows why. Nobody knows why. 220.85 on the top now on Tesla. 220.85. 220 is 219.60. Right there. That's your $1.25 right there. What do we got? All right. One. Still got 8, 5, 50, 45. Okay. GDC. REVB halted up, folks. Anybody's watching it. REVB did hold up. If it's the first one, it might be something worth considering. I think that was on about $2, wasn't it? Let me just take a quick look. REVB, there it is. Oh, see, remember I told you before? If it hits $3, I said REVB, if it hits over $3, it'll start to pick up volume, and there's a lot of volume. At 308, it went boom because it went more than 20% in a short period of time. So it is exactly what I said it would do. Just a quick look. Let's see, if I hit the REVB, then it'll put it on the chart. See? That's exactly what happened. It was at 250. It was at 288 when we looked at it before, 258, and boom, 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 and it hit. Expect, I don't know how many times it's halted. So if I go look real quick at the halts for the day, REV, that's the first one. You can get in one more time. So usually the first halt, if you can get in on the second on the open and then get out, you can make some quick money. All right. I always get out on the when it comes to before the third halt. You want to be out of there. So you want to get in and get out and make some money. All right, REVB, that's me. That's that. What we got here is, I'm just checking some of the stocks, is this IWM up 60 cents, just jumped 20 cents. Nvidia is up today about $1, I think. And then you got AMD is now up about 30 cents. Let's see. And we've got, what do we got? I'm waiting for them to open. Is Tesla is down just slightly, about $1 for the day. Apple's up slightly, about $1 for the day. What's this? Meta is down. Wow, no, Meta's up $11. Wow, $11. That was your money today, right there was Meta. I said that earlier, but it was too late. I was watching Tesla. And Meta, by the way, didn't really get affected that much by that drop, the SPY. And then just for kickers, I was keeping an eye on SMCI, which is down today another $2 to 609. So there's a stock that's hurting a little. It should go pretty much with NVIDIA. All right. Is SMCI in here? I didn't see it in here. It should be in here. SMCI, probably red. There it is, my first red on the chart. Okay. That's good. That's good. We got a breath of air, and nobody knows. 1024, U.S. unemployment. It may be speculation of the unemployment. It says U.S. unemployment rose 1.3% to 1.53 from March to March. You see, 1.3. But if what happened is they told us last time that it went up 2.3. They lied, the unemployment. So it rose 1.3% instead of 2.6%. And they're not reflecting that in here. And if it is a reflection in here, that's why the drop. And I told somebody yesterday that they lied. They told us 2.6 if you look at the report last time. So I think we're going to hear that today on the Fed minutes. But it says 9:50 on strong financial results. Fed minutes to be released at 1 o'clock. Doesn't say why or how. I still don't know. I think it might be speculation on the unemployment that made it drop. And I know that instead of the 1.3, it was supposed to be 2.6. That's what they told us on the speculation, and they lied to us each month for a whole year. They lied about the numbers. All right, let's see here. I got 238.50 on Meta, 538.50 on Meta, and 538, and then I got 537.50 is support. That should be the dollar. Perfect. Oh, it's right there. Right there. Oof, right there. And then my AMD came back down to about 155.75. That's going to bring it on the top. 155.75, 156.75. We'll keep the dollar in there for right now. 75. And actually 150. It's up higher than that. So we're going to put that up to 157. Right, 157 resistance. So that brings the support to 156 on AMD. Sorry, I said the wrong stock. 156, and then I've got Apple, which is still in the same place. It's at 227.35 right now. Resistance being 227, about 227. What do I got here? It's not right. 70, 227.70. It is about right. I'm going to leave it there. Out on 2 contracts. And how did you make out on that? You got to tell us. Come on, you can't just keep us in suspense. How did you make out on those 2 contracts? And you kept your patience. I give you kudos, because that was that. Most new traders, the minute they saw that happen, they would have dropped out, not realizing that after the bounce, it's got to come back up. So I give you kudos. Even if you lost less than $50, you did great. If you made $50, you did better. How did you do? And try sometimes when you put the contracts, tell us the contracts you're in. If you get into contracts, put it on the board. I just got in 2 contracts at, let's say, 50, almost 8. Oh my God. Wow. Wow. You did fantastic. You said you only had 2 contracts? Because SPX pays 2.5 to 3 times. And when it gets back to, wow, very good. What was the contract? Good for you. What contract was it? Yeah, man. He gets more than a taco. He gets a slice of pizza. I give him the whole pie. 800. Did you pick those contracts, or did you pick the contracts I put on the board? So you got 3 tacos and 2 slices. You could have a party now. Wow, very nice. Now take a step back and just relax. Don't give it back. Trading profits. You've done this before. Good for you. Excellent. I'm so glad you showed people not to get scared. You know what? Most people, they get scared. They see that and they freak out. And the first thing they do is they sell out. And I used to be one of those traders until I realized it always comes back. And I'm always kicking myself that if I just waited, Well, 5620, 1350 limit order got out. Oh, excellent. I love it. I love it. So you got 4, you got 410 times 2 is 800. Wow. You did really good. Yes. Yes, it is. It's think or swim. Expertise MISA. Expert MISA. Yes, it is Schwab. I use the Schwab because the charts are easy, and I like to keep my charts simple. You can go to other people's, and you'll see they got the 200 and they got the 50. I use that in the think script on the top, so you don't need to put the lines all over the place. Just look up and say, okay, let's see, it's 560. There's nothing here that really reflects going up. We've already, because we're looking for new highs. 565.16 gives us 565.17 gives us a new high on the SPY in history. So we're at real big highs right now. All right, we're looking to get to the VWAP again, 221.75 on what do you call it? On Tesla, 221.75 right now. That's the VWAP. We're at what do you call? I'm sorry. We hit 35. Let's say 40. We're trying to get to 75. 40, and that would make this 15. Put it up to 220.15. Should be right on the numbers, right there. Let's say that right there at the might be very close. $1.25. All right, I haven't put any more alerts out for right now. All right, and then here, I'm going to put this down a little bit. Look at that. As I'm looking at NVIDIA and I say I want to put this down a little bit, it freaking drops on me. All right? You got to love that. Out of all the ones I could have picked, that's the one that went down. All right, so we got 127. We're going to say 45 is our, and 128.45 is our resistance now. 128.45. Let's see what we got. It wasn't that much. It was about a 30, 40 cent drop. Really, we're about here. is 70. Let's see what's happening here. And the SPY too. Why? Why the drop? 12, 1031. There it is. USA gasoline. What do we got? Gasoline inventories, a draw 1.60 versus a draw of 0.1. Estimated draw is 2.89 prior. Oh, so we're down. Of course we're down, because that's how Joe brings the prices down, to make it look before an election time that he's doing something. He's using our reserves and putting us to nil. What a freaking idiot. And then blaming it on Donald Trump, who, in the 69 years I've been on this earth, is probably the best president. I've never seen a president do more for his country than that man right there. 55 and 60 is 45. 560, 45. 560 is perfect. I'm going to leave the 50. Perfect. Wow. Meta had slight pullback to 536.25. 536.25. 536. Let's say even 536. And then 537 on the top. That's where I'll put it. 537 on the top. Right there, perfect. 537. That's perfect. Dollar, 536, 537. Everything else is good. Apple pulled down just a little bit to about 226.90. 90. That's good. What are we looking at? Right here. Okay. I'm going to pull back here, but I'm going to leave it right at the VWAP at 226.90. It's going to give us here an Apple 90 and 70 is 60. So it came just another 10 cents right there. Bingo. And then here we got up a little bit more, up to about 157.20. And that's going to give us 20. 156. 20. Let's leave it at 20 on the dollar. See what happens. It's very close. Still dropping on Meta, still dropping. All right, where else are we dropping here? Meta's dropping, SPY is rising. Tesla. See, it makes you did really good on that. Kudos to you, Trading Profits. $800 profit there. Very nice. Well done. Well done, my friend. All right, it is 5:30. I got to just real quick take my vitamins. Real quick. Everything but two. Lunch. 1, 2, 3. 2, 3. 6 at a time. So the hell they have make? I told you it was going to go up to the top again. 561. Well, I didn't get rid of it. We're at 85.90 now. And the active trader comes through once again on 2 states there. Look at that right there. I told you that 561, you got to listen to me. And I told you this one here. That one's not there yet, but it's on its way up. Let's see. 561, very nice. Wow. You should have, boy, you would have been up about $2,000 right now. 561.40 right there. There's your high. 561.50. Let's say 50. 561.50 is your next step up right there. And my here is about 25. So it's 561 and 25 right there on resistance. Shit, I lost it. Where the heck did that go? 561. Where the heck did it go? Unbelievable. duplicate that down. All right, let's edit this to 561, 561.30. That's right. Let's take that away. RESISTANCE. They'll show up someday. 30. Make this solid. There you go. Okay. 5, 6, 30. And that would be on the back side. 30 and 30 is 70. Right there. Bingo. All right, and there's my 45. That's a hit right there. He's going to put 45 too. Right there. We're going to move this up to 128, and 65 is perfect. And we're going to look for a hit here at 129. So we're going to put an alert at 129 for right there. 129 alert. $129, boom, 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 right there. All right, and this one here, I'm going to bring this down just a little bit to 224.25, which we were at before, 224.25. So it's come down on the top side, 224, right there. Oh, shoot. That didn't work out too well. 224 and 25. Alert on the top there. Boom. Just bring it down a little bit, and then we're going to bring this part here, and we're going to bring that up to right up to there. 35 is perfect. Just say okay, and then here would be 15. 35. 21. It's not right. 222. It is 220. 222 is 221. Okay, there you go. 221.15. I knew it was right. This didn't make sense. All right. 45. Boy, oh boy. Wow, those candles moved so fast on SPY today. Yeah, they did. You'd be up almost $2,000 if you'd held. I told you to hold. I told you we're going to hit that 561. Now we're going to shoot for 565 on the top. I think I took it out. I had it yesterday at 560 when it was 520. When it was what was it? I think 552. I put in 560 yesterday. And I took it down when it hit below this morning, and I should have left it. There we go. There we go. He's kicking himself right now. I hear some knocking under the table there. You did great. Hey, come on. Better to have something, better percentage of something than a greater percentage of nothing, right? Nobody ever knows. Look at that. There's the click right there. There's the hit right there. And the next one up, that brings us to now 75. I'm telling you, 75. And we're looking at 561.75 up here. And now we've got edit this to 50. 55 is there. And then here, 95. Love how he does that. Bingo, 60 cents. 60 cents. 65, 65. Here we go. Here we go. I'll just leave it in there. There's another one right there. Bingo. Right there. Got it. So these are all the alerts I've put out for you guys that if you just stuck to the plan, you would have seen. There's your 75 right there. Bingo. Last one is 562. 562 coming on your way right now. Boy, I wish you would have waited. See, he doesn't know me. That's why. 562. And then here, we're going to put this to 75. There might be some pullback around 90, 95, so be careful. Oh, we're hit 97. No, we're going to hit it. We're going to hit it right there. Right there. Right there. Bingo. 95. There it is. Bingo. There's your hit right there. Let's cover it. Right there. 562. Next one. If we continue to go up, next step up is 25. Next step up. is 25. Boom, right up there. And that puts us at 560 here. 560. And that brings this up to 40. Like this. Boom. What a delicious day, huh? But I called it. It all started with Tesla this morning when I called it right on the mark. That was a great call this morning. And then a good put. I didn't even I just called it a pullback. I didn't realize it was going to pull back that far. I knew it was going to pull back, but okay. Calls got filled on the drop. Meta. Calls got filled on the drop. Oh, excellent. Then you did good trading profits and you just got back in. Just looking at Meta, there was a drop right here. I would get out there. So there's your drop to here. You got filled. And right now, let's say, we still can see a little higher, but be careful. You can see a big drop too. We got 537.70. I would take my profits. Well, there's a little pullback. Ready? 1, 2, 3. Next hit. It might go for right short of 538. 538. Ready? I got 75 in here. Let's put 75. It's having a lot of resistance right here. That's twice. I'd get out. Next time it pushes, just get out. Get out. It's trying to push. If it doesn't, you're going to see a big pullback. Okay. AMD pulling back. Apple pulling back. Meta pulling back. 490. Oh, excellent. This guy's doing great today. Look at this. Look at him. Very nice. They're cheap. At the price, the 490, 575. So he made 85 cents. Excellent. 2 contracts. How many did you take? I'm a 5 contract guy, so I always do 5. With you, I got to think in 2s, but that's still very good. Here's another one right there. Look at this. 129.05. 129. Let's make this 129. The alert. Next is 25. 25. 129.25. I don't know if we're going to hit it. We already did. So there's the hit right there. Right there. 129.25. Just as I was doing it. Let's bring it up a little further to 35. Let's go to 45. 45, 45. We really want to see that 130. If you remember, I said earlier today, we'll probably see on NVIDIA 130 day. Probably see a 130. And there it is. It's coming very close to what I called. And then here, I'm going to put this up to 129. Right there, resistance, and 128 right here. Right there. Boom. Let's get rid of this. Get rid of that one. Let's take this here. Look at this. Look how far. Look at that. What I tell you, 224.25 is what we were looking for. 223 here, 35. 223.35 resistance. 223.35. 223. This just went up $1. That was $1 run to 222. That was another $1. Exactly $1. Okay, so far you got 2, 3, 4, 5, 7, 3, 4, 5, 7, 8, 9, 10, 12, about 14, 50, about at least 15 alerts today that have hit. Very nice. Yeah, they were cheap. So you put out what, $2,000, $2,100, less than 2,000. 5 times 5 is 2,500. All right, 2450. Okay, that's what I tell you about that. You pull back, and I told you the same thing on Meta. See, what did I tell you? After that thing, it was going to pull back. That's why I told you to get out. Unfortunately, you get it 5 seconds later. Let's put this up to 228 right here. Let's put this up to 228. That is our resistance point. 228. This is perfect. This here, we've got 158. 158 is 157. Should be the VWAP. Should be around the VWAP. Right there. Let's see if it lands on the VWAP. Right there. There's your VWAP right there. Okay. And then you got pullback here. Came down a little lower. We still come down a little bit lower. Let's see, what, I got 45 in here? I got 50. Look at that. Right to the VWAP. Right to the VWAP. 534.50. That's another dollar. So we got about 534. Let's say I didn't see it. I'm going to say 75. I don't know where it went. Unbelievable. Look at that. I got to take this call, folks. I'll be back within 10 minutes, guys. Hold on. All right, folks, I'm sorry. That is a son of mine who is actually 41, had bad, 42, 41. And he never answers his phone. So he is finally, I've been trying to get with him, and he finally called me back. And your kid's got to come first. So I don't get paid enough to do this stuff. But when my son calls me, I stop everything because family comes first. So I hope you all can understand. You probably saw me walking around in the background. I was just pacing. All right. I need to take one more pill and I'm back with you for a little bit. I've been fixing the charts, as you see. I've been stepping back and walking around and fixing the charts. All right, so take this one pill. I don't think I took one. I didn't. I am here. What did I miss? Anything? Trading profits. You make another $1,000 while I was gone. Is he even here? Let's see. No, he left. Thomas is here. All right, folks. How are we doing here? What do we got going here? 560.10. All right, so I got 560. I got 560.20. Let's bring it up to 560.35. I'm going to put the resistance up around there, 560.35. I'll bring it down here to, that would have to be 35 is 75. 75, 35, 65. Wait, 70. 70, 35, 75. I had it right the first time. It'd be about right there. Okay, that looks good. SPY. SPY's leveled off. You can see it came all the way back down again. What a game. Look at this thing. There was a lot of money to be made on the puts there. All right, and I should be on a 560. Let me go check out the contracts one more time. I have 561 in there right now, and it should be 560. So let me just do the contracts real quick. It should be a 560 on the SPY. 561 would have been fine, and a 559 on the put. 559. I'm putting them in, and then I'll put them on the board. Then on the top, let me just see real quick. I have 56.10. So we got 50. That's exactly where it is, and 56.15. That SPX hasn't changed. They're probably pretty much around the same. Tesla, I got 225 is correct on the call. I've got and it's 220 on the put. Nvidia, I got 130 is right, 125. Then on Apple, I've got 230 is correct, 225 on the put. AMD, I got 160 is correct, and 155. And then Meta is come down, is 535. 535 on the call, 530 on the put. There's your contracts as they stand right now. Time's 11:27. Sorry I had to take off all that time with you guys. Wow, those candles move so fast. Got filled with 98.65. He did really good trading profits today. Did trade for some profits. He did really well. Kudos to him. If he had listened to me, he would have made 2,000 instead of 800. But look what happened after. It went to the 561 plus on this. I had 561, so it went all the way back like I said it would after it dropped over here. This is where he got at. He held on. He got out. If he had held, he would have made twice the money. But woulda, coulda, shoulda. Anyway, it came back where I said it would, and some. All of them did. And that's why you can see, and I haven't been back since then, so I've had no alerts that I called out. My alerts have been spot on, starting this morning with Tesla, where I called it to go up and then come back all the way down, and it's exactly what it did. So I don't know how I called that so right, but it was right. And anyway, how's everybody doing? Anybody have any questions for me about anything? We still have the Feds at 1 o'clock today, I believe. So I'm taking a quick look. June, July, August, September, July 26. We're in August. There's nothing in here for the calendar. Let's see, FOMC, transportation. I don't see it in here. News and events, press releases. That's not in here. Fed. You know what? I'm not even seeing it. I know there was supposed to be something in here today. Anybody find it when they're speaking? I could have sworn it was 1 o'clock. Anybody here listening? I'm gonna make sure I put my microphone on, I got a habit of doing things and forgetting. And as it is with you guys, I'm always talking to myself. 41, 41, 54. All right, let me see if I can find it one more time. Fed's meeting monetary calendar. August 24, speeches, FOMC meetings, board meetings. Let's see what comes up. All right, Thursday. Here we go. Now I got it. I got the right calendar. 21. There we go. 1 o'clock, it's commercial paper. 2 o'clock is FOMC minutes. That says 2 o'clock in here. Wednesday, 8/21. They said commercial paper starts at 1. Well, nothing happens till 1. They're not showing anything. Usually it pops up, or they give me, it says right here, watch live. That's a speech from Jerome on the 23rd, on Friday. That's Thursday. Wait a second. Oh, today. That's so funny. Oh, Wednesday. I was looking at Wednesday. Wow, there's a watch live on Friday from Jerome Powell. That's very unusual. Economic outlook. It's not good. And I can tell you this: if I really believe, and I believe Donald Trump, and I'd rather listen to the billionaires out there who are saying that if Kamala Harris gets in with that communist, and he is a communist, if he gets in with Waltz, we're looking at a depression, the likes we've never seen. And if that happens, I'm going to start taking my money out of the bank and hold on to as much cash as possible. I don't trust about what's about to happen. And if it does happen, it could be years before it unhappens. Anybody else got the same feeling about that? I'm looking at REVB is up 141. What else do we got here? IWM is up $1.44 also. Both in the $2 range. I see one of them came back down. It was up at 298. It went to 3 something. And now it's at, let me refresh this page. Let's see. Yeah, it went to 350 on today. I said if it went over 3, it would get some steam, and it did, but it came all the way back down again. So that's the end of that. I'm not watching anything else. Let me take a quick look at the, there's the Fed money. Let's say June. This is the wrong place. News events, press releases. 29, 731. Where is it? 815. Let's see, monetary policies. I just got it a second ago. News events, speeches. Here, speaks. I don't know. Forget about it. If it comes on, we'll find it later. I wanted to look at Finviz for a second. Got 80 right there, so it just popped down. So it's been going down. We're just at the about neutral, 30 cents on the Dow. It's nothing. Nasdaq's up $44, 43 and change, 1231 on the S&Ps. Russell's up, and you can see right now Meta and Google were bringing it down. Now Google's bringing it down the most today, and the financial sector is not doing too well. And my drug company, Lilly and Avco. All right, so there's not any real big losses in here. Nothing even has more than 1%. So I think for right now, you're pretty good. You can see here we're still in the same stocks, except for VHI. I wouldn't look at this anyway, 7 cents. Neon lights right up. Neon still very little. Volume is only 2.99. This is, I think, 305. I don't know if that's million VHI. Could be. That's a lot. That's 66. I want to think that's thousands. 305K, but until I open it, you're not going to know. All right, everything here is pretty much set. Let's go look at the top real quick on Meta. Meta's still in its channel here. It's at the bottom of its channel. And then you got this one here. It's also in the channel. And same here on the low of 30. That can't be. I might have done it by eye before. It's just doing it quickly. 226. Let's go to 25 on this. 226.25. And it's about right. It could be 30. I'm gonna leave it on the point 25, and that would make this, what do we say? 70 cents is 95. That's exactly right. Pretty much 75. It's pretty much right there. 227. That's our point right there. At this point, 227, and we said 70 cents less is. You know what? Remember before I said I think it's 30, but I wasn't going to put it there. Let's go to 30. 30. Let's do the 30, and there's your 70 cents. Perfect. It works out perfectly. Here we got a little tip there, double high, at 20. What do I got here? We've got just tweaking it. 20 and 20 becomes 20 on the bottom. Let's see. You know what? I kind of like the 25 here and the 25 here. Watch. Gives us $1. 25. Keep it there. 25. Unless we take it down and bring it 25. We go to 50. That brings it to, you know what? That's not bad. I'm going to leave it there. That brings it to 75. I think that's, we had it 70 earlier. Okay, or yesterday. Let's look here. We've got about 531.7. Ooh, snagged. I got snagged. Hate it. Sorry about that. It just says, watch, boom. Okay, 136. Right, one more time, not getting snagged. 532. Let's go down to 531.75. 531 and 75 on the SPY. It's going to give me 35 on the top, 60 cents. So watch 35. That's it. 534 with 533. That's why. Okay. 533. 35. There's your 60 cents right there. All right. Perfect. And then here, it's about right. We got 156.50, and we got one. What do we say? What did we say? We put it there, 25.70. We're good. That's Apple. There's AMD and Meta. And now we got the SPY. It's coming down a little bit. We're looking at 559.65. So we're going to come down a dime. 65. Come on. 65. 559.65. I didn't do that. Oh, leaning on my keyboard. When I lean on this thing, it does that. I don't know why. Not a good thing. I'll be shorting out the board. All right, 127, 127.75 is 127 is 128.75 is 45 is 70 on NVIDIA. Let's see how that looks. It's really very, very close. This is good. This is good. And then here we got $1.25. So that's going to bring us here to 220.30. 220.30. 220.30 and 221.55. 221.55. There you go. That's going to bring it tight. What's the low? 218.86. All right. We're right about here in the middle. All right. That looks good. Anybody have any questions? Anybody? He's gone. Wasn't impressed. Okay. And stock. Any thoughts at all? Any questions? Any thoughts? Okay. I'm going to refresh this real quick. You know what? If I leave it on here, you won't see any flash. I don't think you'll see any flash. Let's see if that works. Let's see. If I do it this way, I'm right. No flash now. Okay, you don't even know when they did it. I don't even have to say anything. If I have another one on my system, so it's in the same ISP, you don't see it. So though you might lose my camera for a split second, you don't even realize what's going on. I hear voice something. Here we go. That takes care of that one. This takes care of this one. Oh, that's so much better. And I don't need this one. I'm going to take this. I'm going to leave the feds there. I'm talking to myself. Up again. I think I lost you on both of them now. I don't know why. I'm just going to leave one on. That's what usually happens. That's why I don't like two. All right. Not a thought from the gallery. Right now, it's kind of slowed down a little bit. Let me just go check my scanner for a quick second. Right here, and scan, and scan. And we've got action. We've got EAST up 20 cents. I don't really care if it's under $1. Let me get rid of this. I want to make it $1. Hold on. 1.0. Okay, got it. Rescan. Get rid of anything under $1. Very nice. Okay, PRCT is up about $12. PRCT. PRCT. I'm going to put this in my watch list. CABA is up a little. Anybody see these at all? CABA. CABA. None of them is shortable. 750, 841 is CABA. KYTX. Another one. KYTX. These are on top right now. KYTX. I'm going to put these over here so you'll be able to see it. Watch. You can see me adding them in. Let's see where they end up. KYTX. And where's the other one? Kava right there. So they're still not happening. This is the scanner. So really, there's really not much happening right now. RD, let's see, QBTS and RDHL. That's the last one. RDHL. Let's get rid of this one. Let's get rid of this. RDHL. There you go. No more red. Okay, that's really about it. Let me see if I still got you guys. There you go. Okay, that's it. I want to go quick over to large charts. It's nothing is happening. Let's bring it into the watch list. Let's try Reverb. Bingo. There is nothing happening here. SMX, nothing happening here. These are dead right now. All of them. Same thing here. Slightly going up just to the VWAP. Nothing happening. GDC. Nothing. Nothing. It hit its high. It's done. In fact, this one here. Let's see. BBAI. PRCT. That one's still going up, but it's an expensive stock. KYTX. I don't like it. It's very spotty. I wouldn't touch it. Okay. Be very careful. That could be a pump and dump. I'm getting rid of it. RDHL. Same thing. See the way it's moving? They're probably low floats, and somebody pushed them. I don't like that at all. Kaba. What happened to Kaba? Kaba? Missing something here. Here it is. Hold on. Okay. Kaba. So I got PRCT. That one is a high price. Kaba. There's a little slight pullback. I keep an eye on that one. Mara Riots. PRCT. What was the other one? BBAI. GDC. I don't like this one at all. It's going down. Can't do anything with it. Okay, let's go back. Why is my SPY in here? Back to the SPY. All right, there's nothing happening right now. Good time to take a lunch break. So that's it. That's all she's wrote for the moment, folks. See anything worth running after right now? Losing money, you're in consolidation just about on all these, and the same thing on the top. Take a look. Here's the SPY. Here's your Meta. All right. All consolidation right now. Same thing here. It's definitely Meta here. And go back to the SPY. You've got consolidating here, up and down, just some chop. A little bit of pullback coming in right now on all three avenues. What we got here? Let's go to 65 here. Yeah, just a little bit of pullback. That's about it. Nothing happening. All right, I'm not gonna flash it. All right, that's it. There's nothing to do. I'm not gonna find things to do. When you have time, can you explain how to read the Squeeze Pro indicator? Well, the Squeeze Pro indicator, which is a great indicator, really the best way to make you understand is they have different colors. This is the squeeze up. When you're in the green dots, that shows you're in the squeeze play. So you're in the squeeze up, and then you're squeezing down. These things here, the best way is to do this, all right? Squeeze Pro indicators. I have a whole bunch of stuff on it. When I sell it to people, I usually give it to them and all the sites to look at. But you can go here and actually watch all these videos on the on the, it's really a little bit better than the MACD, but put the MACD on steroids. That's what you got here. Now there's a chart. Is it worth it? Okay, not only does Squeeze Pro bring more, all right, here's the answer. This is what the internet says about it, okay? Is it worth it? The Squeeze Pro, worth it. Not only does the Squeeze Pro bring more opportunities to the trade table, more squeezes, but it also helps the traders determine the potential power of the move around the corner. This can help aid a trader when making decisions regarding position sizing, time until expiration, and choice of synergy or the strategy. So the answer is yes. I sell the whole program for $100. It's a $700 program, but it gives you a lot more than even that. When I go over it with you, you'll see that's also this here. All right. You got the Squeeze Pro in here. I give you the Think scripts for free, regardless. But if you look in here right now, I look like I'm missing something. Hold on. Where is it? Gotta get it in there. Yeah. Okay. Let's edit studies. Should be there it is, the Squeeze Pro, and then the Squeeze Pro here. So it's got the signals in here. So if something happens, you see these arrows? They come in under the Squeeze Pro too. So you got the Squeeze Pro and the Squeeze Pro, and then you have the you can get the free ones in here. All right, this is under share. This would be this is Think. Hold on, give me a second. Share TTM. All right, you can get the free one. So it says here you can get the where the heck is it? Here it is. The Scalper Alert and the Squeeze. What this is on the top is that's the Scalper Alert, telling when something's going up or down. And again, you have to watch. It's better in IM, first minute, 2 minutes, or 5. It can be good in all three. Okay, it can be good in all three. I know you don't like the 1 minute. I do this because we watch this minute by minute for people, because 2 minutes may be too late for somebody with a very small account. All right, for somebody with a larger account who's not worried about that. Like if we take a look at this and we go into 5 minute here, all right, you'll see right now. Let's go back in. Ready? Let's go in here. Let's open it up. Boom, boom, boom. Here's 5 minutes. It tells you that it went up, and there's an upper doji, says it's going to reverse. But right now, we're still going up. All right? We're trying to push through. And then when we look at this on a 5 minutes, it shows here. You have to know what the dots mean. Let me see if I can go find the thing with the dots. Then you can read up on it. All right? Just give me a second. It's been a while, so I don't remember off the skin of my head. I just look at it, and I know how to read it for myself. But give me 1 second. All right, I gotta go on this other computer. Oh shit, what's this? That don't belong here. Options, futures, Deckmore, chat with me, videos, positions, trading, teaching sites. Let's see if it's in here. I have it somewhere. Support resistance, POS tutorial, how to play stop losses, trader set. Not in this one. Pros and cons, averaging down. There's so much stuff. Right, let's get out of this one. It's not here. Let me look in trader chats with me, trading computer, POS scanners. That's it. Give me a second. Better daily charts, EM sharing. Traders wanting POS setup. What's this say? Gotta give me a second. Ooh, there's a lot of good stuff in there. Come on, I know I have some great. I had them all lined up. Videos to watch. Let's see what's in here. Lessons, top short. Squeeze Pro. Here it is. Okay. Plus TOS scan is. What's in here? All right, this is not the one. That's the one with the actual program to give away. Is there a pivot? Squeeze Pro signals. This might be it. Oh yeah. Oh yeah. Okay, I got it. This will tell you a little bit more about what the signals mean. Okay. Give me a second. Boom. Up. Right here. Here you go. Right there. Is it in there? It looks much prettier when you see the pictures, but you can read it from number 3, written by Duncan Dobbs. Let's see, Squeeze Pro position. Let me take that, get rid of this one. Indicate the, yeah, there you go. You have to just break this down and read it. I have it as a folder, so it has more colors in it. It's really, really nice to read it the way I have it laid out. But squeeze one, the orange high compression, low compression on the black, mid compression. But you have to read it, and it'll teach you about the arrows and the colors. Now, the free one, this won't apply to this. This is more for the Squeeze Pro. There's the Squeeze without the Pro. That's free, but it's nowhere as good as this one. It's definitely worth the freaking $100 that I charge for the whole program. There's about 100 apps, about 50 apps in the program. I don't even use them all. Just to give you an idea, if I was to go into, let's say here, and I go here, right? And then I go into the word shared, SHARED. This is all the apps in there. You got the colored candles, Sniper, you got the Darvis, you got Dino Range. You can play with every, look at this. Look how many programs are in here. We're only using 2 out of this. So you can go in and take each one, utility label, and let's say you open this up. Let's see how it looks open, if I can get it open, if I can figure it out. Come on. There's a way to open this. You can take each one and let's see. I know there's a way to make this all bigger. Come on. Strategies, breakthrough. Let's go look back at shared. Not coming up here. So it's in the studies. It's definitely in the studies. Shared. You can go to right there, and you can take any one of them and go look and go Darvis box 0, Darvis box, right? And then you can go into something like the internet, and you go TOS Darvis box. What is it? And then it says Darvis box study generates buy and sell signals based on crossovers of the price plot of 2 bands. These bands are plotted high and low price. This is really good. You see, I should be using more of these. So, like, where's that Darvis? Where is it? Darvis box. There it is. Let's apply it. So, what it should have done in here, there it is. There it is. I love it. It put it in the high and low for me. I'm working this out myself. Look at this. Here's my high, here's my low. It's working it out for me in different ways. You see? At different times, different highs, different lows. And it puts it in for you and it gives you bars. Now, can you put them across? Let's see. Exit study. No, you can't. You can't extend them. So, but there's different studies in here, and you can look up each one and see which one would benefit you the most. I haven't taken the time, okay? That's my fault, not yours. There's so much to learn from the programs I haven't even given out yet. All right. Let me get rid of this for a second. Come on. I can't find it. First of all, I need to get rid of that. Where is it? Take off the Darvis. Darvis box. Until I know how to use it. Apply, okay, and then come back to this. See how SPY dropped in that time. But there are different programs within the program that if you learn about it, you'll come running back to me. You'll want it. Believe me. I sold, when I used to push it, I sold about 50 copies of it. So I'm just letting you know. Edit. $85, $558. Bring this down right below the VWAP. 13 exponential is 60. Let's leave this at 60. It's a little bit lower. Why did we just drop? Any news? Nothing. Yeah, 552. Here we go. Former President Donald Trump posts on Truth. Join me from Asheboro, North Carolina. Oh, I'd love to be there with him. Wow. I can't wait for hours outside. Not NVIDIA, fewer stops rising. Target shows consumer resilient. Annual jobs may move markets. But which way? Doesn't say. Can't read it on here. But right now, I'll move down. I got a Squeeze Pro with Trading View. Really? What do you mean with Trading View? Gave you a Squeeze Pro? That means you can use the program with Trading View. How do you have it? What else do you have in there? You got Squeeze Pro with Trading View. I never heard that before. But you can't move it. You can't take it and put it in another, you know. Are you using Trading View? Talk to me, Golden. I know you're where? You're in you in Canada? Where the heck were you at? We didn't have conversation. What happened to our conversation? It's gone. That's weird. Montreal. I remember. So you don't use but if you have it, I can't understand how you would have Squeeze Pro with it or with your Trading View. I never knew that. Let me see. Trading View. Does it have Squeeze Pro? And how much of the program do you have if you do? The Squeeze Pro is used both to find areas of consolidation. Trading View doesn't have the Squeeze Pro. Trading View Squeeze Pro indicate a simple trading trade view. Let me see if it's the same. Squeeze Pro into high and low compression squeezes. The Squeeze Pro is used to find areas of consolidation. That was 2021. Maybe they sold it to them. I don't know. You know how good the free versions are. Oh, you don't have the Pro. You have the Squeeze. I don't think you have the Pro, according to this. You have the it says ST Squeeze Pro, but let's see. Yeah, it does. It has the Squeeze Pro on the bottom. I say it. Wow. Very cool. If you can add that in, go. You got it for nothing. Very good. You can't take it with you. There's no way. I don't think you could. You'd have to know. There is a way, but you'd have to know how to get into the back end. Like if you go in here, right? I'm gonna show you something. If you go in here, and it says edit studies. Now, if I go into the Squeeze Pro, watch this. It's shared, right? And I want to go look at. All right, here we go to Squeeze Pro here. But if I go into the sets, two big charts. Oh, that's mine. Strategies. Here it is. So if you're in the study, where is it? TT shared, and you want to be Squeeze Pro. There, here. That's not where you get it from. Signal shot. Let's see. There's a place where you'll see it in the sets. It's not it. Strategies. All right, let's try this one. If I'm in here, edit properties. There you go. There's a way to get in here. I know from here, edit sources. Bingo. Here, if you know how to use this stuff here, you can pull this whole thing, you can copy it and paste it in somewhere. All right. You can make your own and rename it. That's all. Just rename it. And you can make your own just by taking this. Watch. See that? Boom, 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 boom. And then you copy it. Boom. And now I can take this. I don't know if I got the whole thing. I didn't. Let's see if I can select all. I don't think you can. Copy. Got the whole thing? Don't know. You have to go from the top. Let's see. Boom. Let's go on. Come on, come on, come on, come on, come on, come on. Oh, you can do it. Look at that. Then you go in and copy this and get rid of it. Cancel. You don't need this anymore. You can actually start your own. You can go into strategies and create. You see this? And then I can create it in here. Then I can go here, and then I can make my own. So if you can do that, and you could take the system and do it that way. No, I don't want to change this. I want to get rid of this. Cancel. You understand what I'm trying to say? You can take it from, but you don't have Thinkorswim. So what's the sense? Then you have to buy it from me. Go take a look if you have it in the other one, if you can do what I just did. If you know how to write programs, I've done it where I've changed things. Like in here, I've changed these. I opened up the ThinkScripts and I changed it. I didn't like all the stuff that was in it, so I moved some stuff out. Changed the days. I didn't want a 13. He had a 13 day. I didn't want it. Another 13. Had two 13s. I got rid of one. Added one of the others. I only had a 50. whatever it was, I made changes and it worked. I started playing around with it, and I started like a hacker would. Sorry if I lost you guys for a minute. A lot of fun. You can play around with this whole thing. All right, guys. There's not much going on right now. A little couple ups and downs. A little couple of pullbacks going on right now. We'll see if after the lunchtime, I'm going to take some time off and gather my thoughts. So I will see you guys after lunch. It's 11:59. Go have a great lunch, everybody. Take some time off. You earned it. All right. Anybody else have any questions? Because if not, it is lunchtime here on the East Coast. All right. It is lunchtime. Okay, lunchtime on the East Coast. Everything's pulling back a little bit. Oh, my back is killing me. I gotta go. I don't know why I just did that. Just did it again. Keep getting knocked off all of a sudden. I don't know why. I didn't make any changes. All right, bring that up here. $85. I don't know if that's right. 65 and 25. Bingo, right there. Perfect. 45. I'll just tweak them out before lunch and then take some time. 45. What did I say? 45? 45. That's 45 on the top. Higher. Can't be. 70. 45 is 15. There. 1.5. I should put it right on the VWAP. Very close. It's right above the VWAP. Well, now we're going to be below it. Put it down to 30. There we go. 35. It's 05. Right on the VWAP. That's where it should be anyway. Let's just bring it down to the VWAP for right now. Leave it at 128, right below. All right. There you go. Here. There's that one. And then this one's good. That's it. I'm good. I can't believe they give that with TradeView. Nobody's ever told me that before. That's really good news for you. I would definitely utilize it. Put it in. But if you have something else like an RSI in there, or if you have 200, take them out. The less things you have on it. That's why I keep it simple. The less it slows you down. Okay? Have a good lunch. I will see you guys after. And that's it. Any questions, put them on the board. I will pass by from time to time. All righty. Ciao for now. Mm. I never did get my lunch, folks. I've been taking care of. I got scared last night. Put stop on my trading. Lost money thinking market will go down. Oh, I'm sorry. Well, it did go down, but not the way it was supposed to. First of all, if you put a stop loss, it did go down. That's right. It did go down. You went forward. You should have made money right off the bat. You still here, engineer? It did go down, but not like we thought it would, because they're not going to tell you until 1 o'clock today. That I didn't know. And you can't put stop loss on them during post market and pre market. They don't. They only take effect in the day. They only take effect during after 9:30. We're gonna have to get you to show you how to make some money. I showed everybody this morning. I was spot on, but that was with Tesla. One guy made over $2,000 today. What happened to him? Is he still here? Trading profits? No. Thomas is still here. Let me give you a call. I'm gonna make some lunch. What can I make for lunch? I got one slice of pizza. There's nothing on it. I hate plain pizza. It was for my granddaughter. All right, I'll be back. I always wanted to put a little chili on my pizza. I don't know how that's gonna taste. Chili on pizza. I just don't know if that's right. You eat tacos. You eat taco. What do you call it? Mostly the chips. I don't know. I'm hungry. Are the answers on the back? I guess engineer's gone. All right, folks. I'm gonna go run in and figure out something. I gotta eat something. All right, be back in a few minutes. I'll be back in a few. I'm making 2 chili dogs. Uh, so the frankfurters are cooking, and then the chili's warming up. I took another one out. I keep them in the freezer, but this one I took out yesterday. There, everything's starting to creep up a little bit. All at the VWAP. So right now we're in a very bull bear market. We're right in the middle. We're not bullish. We're not bearish. We're trying to get above. So as you can see, hold on, what do we got here? AMD. I'll play with the other ones. I'm playing with the top ones right now. Okay, everything is still pretty close. So we're not bullish. We're not bearish. We're just right there at the edge, trying to see which way we're going to go. I got a feeling I'm going to go back up. Let me see real quick. FinViz. So we went minus on the Dow. We're still positive. S&Ps, but like I say, they're all pretty neutral at the point. So I'm not saying which way it's going. I don't know yet. We got to wait till 1 o'clock. I wouldn't do anything. You got news coming out. So be very careful. I will be back. Yummy, yummy, yummy. That's a picture of what I'm eating. Mmm, delicious. Wow. I wish I could make one for all of you. These are Hebrew National Frankfurters, cooked to perfection, 12 to 13 minutes in an air fryer, upper and lower. Toasted Frankfurter buns, my homemade chili, and 4-in-1 Mexican cheese. Mm, 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 mm. That is to die for. Wow. How are we all doing today? It's Howdy Doody Day. I don't know if anybody else was listening to this, but somebody came up with last night. I was watching on Gutfeld, and they came up with who this guy Walsh really looks like. It's Bob Curry from the Schitt's Creek. Anybody ever watch that series? He comes in like hello, like a sick man. But Bob Curry was really good. I mean, that was an outrageous thing. If you've never watched it before, go find Bob Curry up Schitt's Creek. Mm. So, anyway, I did look it up. Only in Gutfeld could they find that kind of stuff. Actually, somebody found it and came up with it on X, and they put it on, from what I was told. The spy is starting to go. Here we go. Here we go. We ain't done yet. No. We're looking for that 561 again. Let's go to 45 here. 45. I don't think we got that far, but we're going to put it to 45. And then 85. Should be under the VWAP. Let's see. Oh, maybe not. Let's see. Let's go to 75. See, let's do 65 and 65, and that's actually it. 25, 65, and let's go to 35. See what it looks like. Still very close, right there. Oh. I am such a good cook. I will never starve. I'm a better cook than my wife ever. I do most of the cooking. You noticed? Golden Paquito, are you still here? I want to talk to you about that trading view. I want to know if there was anything else in there. Let's see. Is he here? He's always here. Yeah, he's here. There he is. See, he hears me. He does listen. I'd like to know if they got the whole program in there, or if there's any way of telling. I don't know how TradingView works. I know it's a good program. This is delicious. Wow. Almost one gone. Wow. Don't pay for it. Don't do it. I give you the whole program for 100. You figure out how to get it in there. That's a license agreement. That's what it is. That's a license agreement. That 500 a year. They probably get it for 200 a year, and they make it 300 on you. Okay. Love that iced coffee. What else do we got going in here? Let's take a quick look at FinViz again. Oh, Dow's picking up. S&P's still about the same. CAD. Oh, that's Canadian price, huh? So Your dollar's weak right now, right? Let's see. Hold on. Okay. Wow. U.S. dollar's weak. Canadian dollar is only worth 74 United States. Wow. So your dollar is actually stronger than ours. Or is it the other way around? Let's see. Yeah. If you were paying that 500 times 0.75, let's say, you'd be paying 375 in the U.S. You could buy it and own it for 697, or for me, 100. It comes out to about $105, depending on how you do it. Whether it's Zelle is dollar for dollar. If you do PayPal, then you lose another $5. I will tell you, if you learn how to use it, the program is well worth it. 1 o'clock. Are the Feds speaking now? Anybody know if the Feds are speaking? Let me see. Anybody else got it on? Give me 1 second. No, he doesn't. He's not even there. Says he's there, but he ain't there. He ain't there. I can't get it. All right, who's got it? Let's see. I'll have to go get it. Nobody else has it. All right, let's see.
Still not breaking here. This is exactly what I was talking about.
Okay, he's looking at stocks, Riley. All right, forget about that. Let's see. What do we got? What do we got? Okay, I just hit the wrong button. That's not going to help me. Come on. Here we go. All right, let me put this back. This is on me. This is on. Let's see if I can find that. Speeches. Here we go. What do we got? Ah, it's just coming on. Oh. Let's see. Just coming on. Look at this. I can't. I gotta get it in there. Hold on. All right. Let's see. I gotta go in the other computer now. Here we go. And where is it? Excuse me. Sorry. Don't talk. Purple time.
Colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American. Has made considerable progress toward both goals over the past 2 years.
He's lying. How do I know? His lips are moving. I'll get it for you.
Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic. Strong, but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this.
Watch the thing go up and
We
down.
have made no decisions about future meetings, and that includes the September meeting.
Mm-hmm.
The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
This is from the 31st of July.
So just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings for inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data.
There's nothing
it's
worse
going
than
to be the balance
sticky
of
data.
risks as we see it. It's going to be the totality of all of that.
There's that word
that
again.
help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we have
saying this
gain
for 3 years.
confidence, and more good data would cause us to gain more confidence.
So they're not confident at this point.
Thank you. Colby Smith from the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say, really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves.
You're lying
And
again.
I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions. And that's what we want to see. We've seen that over a period of a couple of years and a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely, and that's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past, you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our three. We have two mandates, as you know. The labor market, maximum employment is one, stable prices is another. So we weigh those two things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path down to 2%. So those two things are working together, and we're factoring those both into our policy.
Christopher Gaber, Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent, if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this, and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of, I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of, go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates. And I think this is how we balance them. It's a rough balance, but it does feel like that.
Whatever they're talking about
it's a
has
place where it's
respectively
just a process of ongoing normalization. 4.1% unemployment is still historically low. And we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low. So it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying? Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected. So that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve.
wow, what a good lunch.
Steve Leisman, CNBC.
Markets
Mr.
are not
Chairman,
moving.
back in March, you talked about cutting rates as a process.
I think the reason
In
is
June, you
because
talked
it's
about
really
the idea
being
that the one
taken
rate cut
from
wouldn't be limited.
July 31st.
So,
This information has already been
sort of thought my
somewhere.
first question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts?
They don't want to do anything
Talk us
during
through
the
process that you think, or is it just one rate cut? Or are you in the process now thinking
political
that rates need to be more
charge
relaxed?
that's going on
Thank you.
with the elections. Could be consumed as
Yeah, I
interference.
can't really say that honestly.
They'll just keep
we,
everything the same, like
we've
they've
seen
been doing.
significant movement in the labor market, And, we're very mindful of
Yeah,
this
but not what
question
they
of,
told us it
is
was.
it just normalization or is it more? We think it's just normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this, we raised rates a year ago at the July meeting. And if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market has, I think, unemployment was in the threes, mid threes. So it's a different economy, and I think it's time. It's coming to be time to adjust that so that we support this continued process. That's the thing we're trying to do. Is that we have we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most rate, you would think in a base case that policy rates would move down from here, but I don't want to try to give specific, forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's highly uncertain.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year, as we pointed out late in the year, a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that we're to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data, and things like the ECI report and frankly the softening in the labor market conditions give you more confidence that the economy's not overheating. It doesn't look like an overheating economy, and it looks like an economy that's normalizing.
And if we're to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into
So
2024?
the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months were reporting too low inflation. If you smooth it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those fixed out. 12 month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting job inflation sustainably under 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices? Or is it more important for the American people that you keep rates where they are to bring inflation down?
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the Statement on Longer Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away. You take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased as the labor market has cooled off. And labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year. And the time is coming, as other central banks around the world are facing the same question. The time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk basically with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. So we get a lot of data between now and September, and it isn't going to be one data read or even two. It's going to be the totality of the data, all of the data, and not just and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in and so much happening between now and the September meeting, and we'll make a judgment.
Thank you, Mr. Chairman. Edward Lawrence, Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Well, we'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
Okay, just so as a follow then, so could the Fed then be behind the curve? Because you said some of the reports last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We said that we pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have we had a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was the strong sense of the committee, but it's a conversation that we had today, certainly.
Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction. Whereas, I mean, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation, rate sensitive, interest sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
We have to worry about that. I mean, you're just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy.
This
It's
is
also
having
not
no effect on the markets, folks. None. I'm watching all the markets, and really very little is happening because of the
We're
market.
seeing
This is boring,
we're seeing
and the markets are a little
normalization
boring
there,
right now.
but, wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up.
People
but
are
they're
working
pretty
two
stable,
jobs
and they're
to
historically
make.
high.
They don't tell you this. That people are working two jobs so they can support their families on what they used to do on one before inflation. So that's why there's very low inflation, because people are taking up two jobs, or two people are working in the family that only one used to work before.
On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. Statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So again, I've been through some of the data already, but what we think we're seeing is a normalizing labor market. Watching carefully to see if it turns out to be more. It starts to show signs that it's more than that. Then we're well positioned to respond.
Is there reason to think that the labor market might behave differently this time than it has historically?
I think history doesn't repeat itself. It rhymes. I think
It rhymes.
It's very true.
Yeah.
The economy, you never assume it's going to be just the same. An example would be: is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked. And it's because the situation really is unusual or unique in that so much of this inflation came from the shutdown of the economy and the resulting supply problems in the face of admittedly very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to be very careful about the judgments that we make, I would say. So we don't assume that these regularities
Watch out
will
for
repeat themselves
head and
automatically.
shoulders on all of these. This looks like head and shoulders forming, but It hasn't reflected it.
Thank you, Chair Powell. Mara Bulkley with Bloomberg. There seems to be quite
Yeah,
a difference
1, 2,
between what
3.
the anecdotal data are
Down.
telling us, such as the
There's the
very
third.
recent
1,
downbeat
2,
beige book
3.
and the hard
Down.
data.
Look
Do you
down
take
here.
those
See it?
anecdotes seriously? That
Squeeze
is that
down.
the economy and labor
1,
market are growing
2,
much more rapidly
3.
than what's shown in the data.
Squeeze down. Same there.
So I
Same
do
here.
take that
1,
seriously.
2. I
and
think there's a
the
third
beige
one
book
here.
is great.
Small.
What's even greater is hearing the Reserve Bank presidents come in and talk
Be
about
careful.
their conversations with
I just have a feeling the markets might be
businesses,
pulling
business
back.
leaders and workers and
He's not really
people in
telling
the
us much.
sector in their districts. But I'll tell you, it's a pretty,
Apple just went
you know,
red.
the picture
Google,
is
Microsoft.
not one of a slowing or, you know, a really bad economy. It's one of there are spots of weakness and there are regions where growth is stronger than other regions. But overall, it's, you know, again, look at the aggregate data. The aggregate data is, you know, particularly PDFP, the private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data, especially, you know, it's very hard. GDP data can be volatile quarter to quarter. So it's just hard to measure economic activity. There are a lot of, it's just difficult to do.
All I know is they've been making
So I
promises
look
to
at
bring
both.
these interests
Yeah,
down
but
at
I
least a
wouldn't say
quarter
that
of a
the-
point.
the-
I'd love to
that
see
the
what's going to
anecdotal
happen.
data is-
They don't want to bring it down too fast because they're afraid of going into a deeper recession. Because people are out there spending too much money at
Thank
this
you.
point. They should be holding back.
Jolene Kent with CBS News. Chair Powell, thanks for
I think
taking
we're
our
headed for
questions
depression
today.
at this
You
rate.
have consistently said that the Fed does not consider politics in making decisions. With
Eh.
a possible September rate cut on the table, it would be less than 2 months before the election, and former President
Did
Trump
I just say
reportedly
this
said
about
that
10 minutes
cutting
ago?
rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
They don't do things according to that.
I absolutely do. I think it's, first of all, we haven't made any decisions. I would say it this way. I haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate.
He doesn't look at it that
I really
way.
don't know. I do know how we'll make that assessment. That's what I do know. So if you take a step back, the current situation again is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. You know, we're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary. But we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will
The
benefit.
alerts that I put on the
So
board that you're not
that's what we
listening to.
believe, and
Because
that's
you're
how we will
flipping
always
from one
act. This is my
room to
fourth
another.
presidential
All the
election with the
alerts that
Fed.
tell you what
I can
direction.
tell you this is
And
how
my
we think
alert was
about
spot
it.
on this morning.
This is what we
If you
do.
listen
So
from
it's-
9:30
anything
till
that
10
we
o'clock
do
today,
before,
made
during, or
thousands.
after the
One
election
guy made
will
almost
be
2 grand
based on the
trading
data,
profits.
the outlook, and the balance of risks, and not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. You know, we basically, we have our forecast. We're not, we can run simulations of
Anything.
different potential policies, but we would
I
never
was
try to
talking
make
to
policy
Gold
decisions
who also has
based
no
on the
clue
outcome
what's
of an
going on.
election that hasn't happened yet. We would just, that would just be a line we would
You're
never
not
cross.
listening.
You know, we're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Thank you, Chair Powell. Nicholas Brzezinski from Barron's Magazine. there hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September?
No.
Basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences. There are, and you know, we talk a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. You know, no one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Hello, Jean Young with MNI Market News. Is a 50 basis point cut as a first cut at all likely or even on the table?
Sounds like a little girl.
I don't want to say, I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
Jennifer.
Of course, I haven't made any decisions at all as of today.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
He's not.
Well, so, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go around. And then this morning we have the monetary policy go around. And I think in people's economic go around and in their monetary policy go around, people express their views about this. And there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy. And so,
How do you feel about the economy? I think it sucks.
We'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and but I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examine the possibility, the case for moving at this meeting. But the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question that is the case. That as I mentioned,
Trading is dangerous.
we think that the time it's approaching. And if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
Harmless. You have nothing you can do until 9:30. If you need to make a move at 8:30, you're
Hi,
screwed.
Chair Powell, Nancy Marshall Genser with Marketplace. Former New York President
That's
Bill
why I don't
Dudley
think-
wrote an op-ed in
If I
Bloomberg
would have a
earlier this
certain amount
month,
of money
which you
left, I
probably
wouldn't
saw,
get
in which he
on
said,
something.
quote,
But
"It
you
might
keep
already be
doing
too late to fend off a recession by cutting rates. Dawdling now unnecessarily
receive so much
increases the
good advice.
risk."
So
Is he
many
wrong?
people. I see no
So
question.
this
to
is the
that.
judgment that we have to
Stop
make,
having
and
it.
we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice,
you're listening
to go ahead and
this,
cut
but you're
after
hesitant.
the 7 good months
you
of
don't
last
really
year.
know
We
who's
did.
doing
We
it.
said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. As I mentioned, I don't think it needs to cool off anymore for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see as a judgment of the committee is that it's drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data.
That tells you absolutely nothing.
Right now. What's in the data
It's like the
right now
markets
is
today. They're not bullish and they're not bearish. They're right in the middle.
A labor market that has cooled off, but nonetheless,
But why?
Unemployment is low. The data overall show a strong labor market, so that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see which way the economy heads, and I think if we are to respond to weakness, we're certainly well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and a good labor market and inflation coming down.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we have to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And when you're saying you're going to be data driven, of course, it's always what the data, how they affect the outlook and the balance of risks. But nobody has great vision deep into the future.
You should.
In terms of a reaction function, that's a long time discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Starting to go up.
Jeff, last question.
Thank you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot. With Fed now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things, the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed, because we play an important role in the payments sector, both as a convener and as an operator too. In terms of the CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. we're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial down the road, but we don't have, on a CBDC, we don't have any plan we would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet.
Central bank digital currency. I was not thoroughly impressed by that at all. I did get some information that I didn't know before. I think there's more coming out here at 2 o'clock. Let's see, who is that with? I lost the calendar on that. I was looking at some of the stuff on the CB central banking deposit. If some of you didn't understand that was central bank digital currency. It's a digital form of currencies, fiat currency, which is regulated by the central bank, which I believe is in Chicago. I'm not sure. Central banking used to be everything was a clearinghouse. I think was in Chicago. I don't know if that's true anymore, if that's changed. Somebody else would have to do, let's see. Let's even get that information. All right, let's see. That's this NASDAQ. How'd that get over here? Hold on. Here's the Board of Governors. Here we go. Let me just see. I thought I saw something for 2 o'clock. Press releases and speeches. Can't find it. I had it before. It said something for 2 o'clock. Anybody else? I don't know. I'm going to get at it, but I really wasn't that impressed. He's also speaking again on Friday. So there's a lot of information that we just went through with that. What is this? What is this? Community eBay. Let's take that out of there. Just closing up a few. 230. REVB is still up $1, folks. Anybody who might be watching it, but it's come down more towards the $2. I think it's the one that went to $3 before. And IWM is up 234. I'm no longer watching it. Takes care of that. What else do we got here? It's 13. Okay, we're in the green today, but not big time. Just in the green. Nothing is halted at the moment. What else is here? That's what I want to leave that there. Okay, hold on. Okay. That's it. I think I'm going to get off at 2 o'clock. There's really not much going on at this moment. Unless anybody has any questions or anything they want to go over, do it now. I mean, this is a good time. It's a little quiet, so. Anybody, any questions at all? Any questions? How's everybody over there? There's 8 people watching in YouTube. So just want to shout out to you guys in YouTube. I don't know what you got out of that. I didn't get much out of it. Minutes come out in 5 minutes. That's what I thought, one shot. That there's more coming out. Let's see. I still have it open. I think I do. But I want the other one open. Let me just see if I do a little refresh. Let's see. FOM prompt. That's him all over again. That's no good. Let's close that up for right now. Got to get that back. Here we go. I take that. Copy. I'm going to put that into, I need it back in the other computer. I lost it. So that's there. Is that. Come on. Oh, where'd it go? Oh, wrong computer. Okay. I'm hitting the keyboard for the computer below and then saying, where the heck is it? All right. Now I just open it in the other computer. And is it on the same channel?
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices.
That's what we heard already. What the heck is it? Releases, monetary. What did you say it was on? Banking and consumer. Other announcements. Let's see. What's it going to give me? What's it going to give me? Can't find it. Oh, here's my calendar. Okay, it's on the top. Okay, here we go. 21 is 21. It's the FOM minutes. FOMC, 2 o'clock. Was that what it was just starting? That's not it, is it? Is it with Powell? I don't know. No, I don't want to watch it on that one. Anyway, that's wrong. That's wrong. That's there just to watch it. Come on. I don't know how to get it back on. I don't know what I'm doing. I've had it before. Press releases. We want 821. Say. Oh. Hey, baby girl. Go on the bed. Go on the bed. Go up there. Today. Let's see. Here we go. 821. That's on banking, consumer regulatory enforcement, orders and banking. I'm not seeing it. Submit. See, come on. Come on. I'm not getting. Can anybody else get the page and just list it for me? That would be greatly appreciated. Come on. Come on. Let me do this for a second. Okay, still playing this. I don't want this. I'm not getting here. Here we go. Wait. Please, anybody? Nobody got it, right? Nobody can find it? Shoot. Come on, please. About the Fed news, recent postings. Didn't come up on the calendar. Oh, wait. 2 o'clock?
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices.
That's the same thing.
For the benefit of the American people. Our economy has made considerable progress toward
You're
both goals
lying.
over the past 2 years.
Your lips are moving.
The labor market has come into better balance, and the unemployment rate
FOMC, man.
remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal.
I don't like it. You're lying to me. When do the minutes come out? When it's released, 3 weeks after the day of the position. Statistic calendar, 2 o'clock. All right, give it to me. 21st. Next. I want next. I want, oh, shoot, 21st. Come on, please. Data, consumer, financial. Let's go to calendar this way. It's not giving it to me. News in advance. Keeps going back to the same thing. FOMC statement. For release 2 o'clock. It's not live. I don't think it's live. I think it's just a statement. Nobody, huh? Jobs committee's 2% inflation. Recent suggestions that they come on. Doesn't show me anything live. Oh, I lost you guys. I got you back. I got you back. I'm not seeing anything live in here. It's 2 o'clock. I'm at a drinky drink. I'm at a drinky poo. Nobody else has got it on, huh? Let's get out of there. I lost it altogether. Gone. Oh, here it is. Okay, let's bring it down to here. I'm not seeing it anywhere. Testimony. Videos. That one, FOMC.
Cutting rates, by the way, you really do now see the restriction. Whereas, I mean, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at inflation. Rate sensitive, interest sensitive spend. All equipped to do that. And do it's more just the digital finance is an area that's having.
No, see, that's the same thing. FOMC, and then here's the press conference. That must be the next one. July 31st. Doesn't show the time. Let's hit this, see what happens. The same shit.
Imposes significant hardship. That we are maintaining our restrictive stance of money.
Okay, I can't find it anywhere. Is anybody else finding it? Anybody else? If you can, just list it. If not, the heck with it. I'm done. Just list it. If not, the heck with it. Oh, repeat. That sounded like me, didn't it? Huh. All right. The markets are going back, but I'll tell you what. It looks like DEC's coming back on. want to hear what he has to say. But we don't have to. What, baby? What do you want? Come quick. Come on. Come on. Come on. Oh, you're lazy. All right, thanks for your time. Okay, 2 seconds for Deck. Let's see what he's gonna say about anything. I got music. Deck's going live. I'll just put it in here for a second, but look at the push here. Back up to that other spot. 560, 50, back down again. Look at this. 560, 85. Let's put 95. I told you 561 earlier. We're coming back to that area. 61. And then leave this at 561.30 and back to 40. We're at 30. 560.
Traders, let's get ready to rock and roll. Let's get involved here.
He's lying.
Let's talk about it all. Let's make sure we're dialed in. Team, we are ready to rock right here.
Are we?
Right now, always got to represent the
Uh-oh, he's got a hat on.
community. So, we have right now at this moment, for anyone who does not know at this time, throwing up the Tradecaster camo hat. Why are we going camo? Because
We're hunting.
Today, baby.
We're hunting.
We're hunting for that swing trade.
Absolutely.
Come again, let's get dialed on in. What do hunters like to do?
Hunt.
Like to get set up a little tree stand.
He'll find himself a lady and get a tent and a sleeping bag.
Deer piss on myself.
So you don't get no.
That's what I'm going to do right now in the office. That's what I'm going to do.
All right.
So,
Click. Okay, he's turning the music off. He's done. He's done. All right. I got these back into, look at this. What's going on here? Why did we just jump up like that? Anything come out in the news? 12:30, 13:36? No, so there's nothing for 2 o'clock. Nothing, except the Fed's getting off. Fed's minutes, part 2. That's what it is. It just came out, and it was written, I believe. There's nothing. I was looking for live, but it wasn't. Not that I found, anyway. 60 and 60. The 222? Yeah, 60. And this is here. That's 40. So this becomes 15 on the bottom, right there. 1.5 is your $1.25. Is boom, like that. There's that one. There's this one. And this one came back down. I don't know why it went up to start with. There you go. Who wants to listen to Deck? He's looking at the SPY. We're looking at the same thing with no real reasons. Let's see what he's saying for a second.
He might go off the charts in many different directions.
I thought he did. That's what I said.
As we know, when Jerome Powell speaks, people get excited.
Yep, but they didn't.
When Jerome
But they didn't.
Jackson Hole, Wyoming, people are going to get excited. And we know again, things could be coming on up very big here soon of rate cuts and getting into September and starting to finally start getting into interest rates down lower and lower and lower. There's a lot of hype coming on here, team. Hype from Jerome Powell, hype from inflation, hype from again cutting interest rates, hype where maybe again we start seeing things become more affordable. Or at least you can take out a loan and it's not going to be 7% interest rate. Hey, I can be able to do that.
5.5 ain't great either.
This house, I can maybe afford this car, whatever it may be. So people are excited about it. So what I think is most likely going to happen is I do think we are going to see a brand new record high within the next few days. I think again
That would be 565. Right, 565, 25, 35, 50.
over the next days, this
What I
is
said.
going to start to grow.
I agree.
Thursday, tomorrow, we start.
I agree.
Friday,
So you want to go long on every pullback, go long.
for us to be able to jump in and see.
Engineer, you still here?
Towards 570.
No, she left.
Maybe we start hitting new highs tomorrow, and by Friday, excitement is pushing these.
He's saying the exact same thing I've been saying.
The S&P 500 is definitely going to be the ETF. I was going to say the stock that we talked about, but it's not a stock; it's an ETF.
It's an ETF. Stock. It's a stock to us.
I know. So the thing is, traders, the S&P 500, it really comes on down to right here is number one. I do not know what Jerome Powell's going to stand. I do not know if we are going to cut interest rates, if pause.
We're not. He says we're not. He doesn't want to give any specifics on whether he's going to cut interest rates or not, because again, that would have some bearing on the actual politics. And he's not going to give any credit to Biden, and I'm sure he doesn't want Harris, no more than anybody else does. We don't want her. She's not going to be good for business. She's good for the Democrats. That's it. And they're by the government, for the government. They all become so rich out of it. You watch how rich Harris gets if she became president. Not me. I'm going to hide all my money.
You're just joining us on this day. Like, why are you just hopping on right now? And it really comes on down to here back this is what I knew was going to happen. Today, we were just going to have consolidation. We're going to go up, now we're going to go down.
It was more than that this morning.
We're going up, we're going on. Hey guys, big spike. Just kidding, we're going to dump back on down. Hey guys, we're having a monster spike. Everyone get ready.
All right.
Just kidding, we're going back down. Hey,
I think I've heard enough. How about you? He's saying nothing. I hate that. What's the name does to us. Sorry about that. I just want to refresh it. All right. AR Feds. This has the minutes that were released today. All right. Let's see. Yeah, the minutes are in there. That's what I said, but it's not live. I understand. I told you it was written. That's exactly what I said to you before. It's written. It's not the. It's not what I was looking for. AR. There's nothing yet. All right. What happened to Jay today? He disappeared on us again? Is he all right? What excuse this time? Last week was the kid with the keyboard. Then it was the doctor. Then he was out of town. I'll tell you what I think. I think he's got a woman. I think he's shacking up. What do you think, guys? Is he shacking up? Did he meet up with the queen? Look at that. I didn't do that just now. I said, is he shacking up with the queen? And I went blank. He's shacking up. We're going to call him Shaq. From now on, call him Shaq. Hey, Jake Trades, active trader, said you shacking up. That's all you got to say. He loves when I mess with him. Okay. Blame me. I'm the one guy pushed him to set up and do this stuff. All right. Nothing's moving right now. Nothing. All right. We got two choices. We can call it a day and wait till tomorrow. Tomorrow, I will. Let's see. Tomorrow is, what is tomorrow? I'll be here tomorrow. I will not be here Friday because I'm going to be tired. I'm going to get up at 8:30 in the morning. I have to be at the doctor at 8:30. They're giving me shots in my hand and my arm. So that's a little painful, but it's just the getting up early. I got a big bump over here. That's from playing guitar. When I push it, I hear click, 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 click. It's bone to bone. That's all from playing guitar. You know what people don't realize? You play an instrument, you play guitar, you play the keyboard, you use up your hands. You get so many clicks or so many of these or these or these. You get just so many of those before you use your body up. So what do? You have to make muscles when you're young. So you have muscles before you can do this. If you have muscles, you can't do this. You can't play guitar, you know? It's really strange. You can be so talented and lose your talent overnight. But when I get before God, I want to say to God, I want to thank you for all the talent you gave me. But I came here and I want to let you know I've used it all up. That's it. All right. So right now we're currently looking at no flickering with the interest rates. They're not going up. They're not going down. They're pretty much staying sound. If they are going to do anything, I don't think they're going to lead on before they do it. I think they're just going to do what they have to do. All right, here is, what is this? That's Trade Halls. This should be FinViz. What's going on here? All right, put it in here. Got it. FinViz down here. I'm going to get rid of it. Just want to show it to you one more time. Reverb, SD, these are all the stocks that I have. And here, you can see, let me go real quick. Refresh. You can see where, there we go. Microsoft, Google's pulling us down with AppGo and Apple. But we're still in a positive market. But we've finally gone up a little bit, but it's not so great today. It's been very, very flat. And if anything, at times choppy. So pretty much, I think that's it. That's all I say. What the heck in here? Why is this open? How do I close this? It's closed. Unpinned from the taskbar. What is that? Gotta move it over. I don't want to get rid of that yet. Okay, I got it. Okay. That's about it, folks. I'm not really seeing anything, to be honest with you. I think I'm going to call it a day. It's 2:12. Deck's open for business. And I will see you all tomorrow. So we've done a lot today. I've been here all day. I'm losing my voice. Have a great rest of your day. Be kind to yourself. And don't chase it, okay? Be kind to yourself and don't chase it. And I will see you all tomorrow. There's really nothing going on. Take the rest of the day off. Go out, do a little jogging. Go listen to Deck for a little bit and have a great rest of your day. And thank you all for coming. I am the Active Trader. This is my world. And I want to thank you for coming in, being a part. I'll leave the charts up for a little bit, but I'll take them off about 2:30. All right? Thank you, guys. Have a good one.